Good evening, students. Welcome to the online coaching classes organized by Board of Studies ICAI. Today evening, we are going to have our discussion on this topic called registration under GST law. Before I start with my discussion, as a protocol, let me have a confirmation from you. Are you able to see the slide, and also am I audible to you? Let me have a couple of confirmations. Accordingly, I'll go ahead with my discussion. So let me just have a confirmation from a couple of you, and then we will go ahead with our discussion. I could see that Namita has sent few questions. Namita, 5 minutes down the line, 5 to 10 minutes down the line, I'll answer all of your questions now. Yes, Tejo. Hi, good evening. So let me, I think there's a little gap in sending a response and receiving. Yes. Thanks for the confirmation, Namita and Priya. Let us start back with our discussion. In the previous session, we had a couple of discussions pending with respect to valuation. So what I will do today, I will finish off this particular topic called valuation, and then we will come back with our discussion on registration. So valuation, we have covered till insurance. Let me have this couple of slides which are connected with your dealer who is buying and selling second-hand goods. So this is Rule 32, which talks about your valuation mechanism, how we have to value. Take example, Maruti True Value or Cars 24. These are the dealers, these are the businessmen who trade in purchase of old cars and selling of those cars. Now, this particular rule, Rule 32, has been carved out for those particular people who are into the business of buying and selling second-hand goods. So if you take example of this Maruti True Value, this is a dealer who has been engaged by this Maruti, who buy the old vehicle, do some refurbishment on that particular vehicle, and then they sell those goods. So for that particular mechanism, they say a dealer who is into the business of buying and selling used goods as such or after processing. So what happens whenever someone buys a car, they may do some touch up here and there, some tinkering work, some painting work, etc. And that particular business dealer who doesn't take input tax credit on the purchase of such goods. So one of the condition is here the goods are sold as it is or after a refurbishment. That means as minor repair activities are undertaken. In addition to this, the condition says that he has not taken input tax credit, where no input tax credit has been availed. Now, you could have asked a question, sir, when you're talking about Maruti True Value or Cars 24, when an individual sells his car, where is the question of input tax credit? There could be a scenario where corporates, the large corporates, they have this used motor vehicle. So if they're selling used motor vehicle, they have to charge GST under a particular vehicle which has been sold. So that case, what they're saying, that particular dealer should not be availing input tax credit. Then the value shall be the difference between selling price and purchase price. In simple terms, if there is a profit, on the profit, the GST has to be paid. Sir, what if there is no profit? I have sold it for loss. Then it has to be ignored. So will there be a scenario where the car has been sold for a negative, that is your loss? Will the department accept that particular transaction? Please remember, section 15, when we travel back, there is something called related party transaction. When the transaction has been taken place between a seller and buyer who are not related, and price is the sole consideration. When I, as a dealer, I, as a selling person, have established these facts on the record that there is no buyer and seller relationship, price is the sole consideration. When these two matters have been met with, then the department has to admit this particular value, which is negative. So what if there is a loss? I need not pay GST. Why at all? If we will see a business scenario where there is a loss, possibility that there is a model which has been outdated, possibility that there is a malfunction. possibility that government has come with a norm where 2 years down the line, all the diesel vehicles have to be scrapped. So that could be a scenario where a dealer has been forced to sell at a negative margins. So that could be a scenario. So my rule 32 says that in these three cases where you are buying and selling as it is, you do a minor repairs where you are not taken ITC on the purchase, and if there is a profit, you pay GST on that profit. If there is a negative, you need not pay any GST on that. Extension of this particular model in case of a banker, in case of a pawn broker, where they are into money lending business, where a loan was given by default. If there was an NPA, the particular asset which has been given as a security, that particular asset which has been hypothecated, that will be taken into custody of the lender. So in that scenario, this particular rule 32 says that whatever is the purchase value from the date of purchase, every quarter reduce 5%. So if I have purchased on 1st April 2021 and the possession happened on say 31st December 2021, this asset was used for 3 quarters. So if the value of the asset is 1 lakh, 5% per quarter, 5, 5, 5. 3 quarters the asset was used, 15%. So from 1 lakh, I reduce 15%, I'll be left with 85,000. That shall be considered as a purchase value. And that purchase value will be compared with the value which was repossessed. And if there is a profit margin, that will be considered for the purpose of charging GST. This is to do with your rule 32. Now, continuation, there is something to do with your sale of vouchers. So you would have seen this particular business scenario where the vouchers were given which does not contain a value, or it may contain a value. For an example, so there is a book house called say Vijaya Publishing Book House. This particular book house has given a coupon whose value was printed as 1,000 rupees. They say this coupon has got a validity of 6 months. If the the carrier, if the bearer of that particular voucher comes after 6 months, the redemption value from 1,000 gets reduced. So proportionately 100 rupees for every 3 months. Means they have given a value which has got depreciated over a period of time. They have given a certain norms and conditions. So I, as a bearer of that particular coupon, I go to the bookshop, say after 8 months. So the original value on the voucher is 1,000 rupees. And when I go for redemption, instead of 1,000, the bookshop says that Praveen, you can get only 800 rupees worth goods or services. That particular point in time, this particular rule 32 says that in case of a voucher, the value which is redeemed, the equivalent value of goods or services which have been exchanged, that shall be considered as your transaction value. Though 1,000 rupees was printed on the voucher, at the time of redemption, only 800 was permitted. That shall be considered as the value for rule 32. Then rule 32A, this was brought as an exceptionary nature for Kerala, where they have brought something called Kerala flexes. This is for the purpose of levy of GST on cess. The value which we consider for section 15, the same will be considered. Not much to worry on this rule 32A. This is one important rule. Many of us doesn't even know that there is a valuation in relation to foreign transaction. So in case of a goods, rate of exchange other than INR for determination of value. The rate of exchange for determination of value of goods shall be applicable rate under customs law. So we would have seen many transactions where goods have been exported out of India or goods have been imported into India. When goods have been imported or exported, we always refer to something called foreign currency. Say I as a supplier have got into a transaction to supply goods worth $12,000. So when I have supplied $12,000, how do I charge GST? How do I value for the purpose of GST? How do I measure or disclose for the purpose of GST? They say, please adopt a rate prescribed as per Customs Act. So in relation to goods, I cannot adopt RBI rate. I have to go mandatorily with my Customs Act. Many of us, while filing returns, what we do, we will take RBI rate, we just multiply and we disclose in our GSTR1. And also for accounting bookkeeping, we use that particular RBI rate. I would recommend please refer to the customs rate, because as per GST law, Rule 34 says that customs rate is something which we need to go with. In relation to services, unlike your goods, I need not go with customs rate. I can go with my generally accepted accounting principles, that is your RBI or rate given by your authorized dealer. Generally in business parlance, when someone wants to buy foreign currency or when someone wants to receive foreign currency, we have someone called authorized dealer. So the rate which was given by authorized dealer, that would be the rate we will take into consideration for the purpose of conversion. So this is my Rule 34, which talks about your adoption of foreign exchange. The last leg of your valuation rules, Rule 35, inclusive basis. Very simple rule. Whenever there is a transaction where GST was not charged separately, GST has not been charged separately, then this particular rule says that we go with inclusive mechanism for the purpose of calculation, the value into 100 divided by 100 plus rate of tax. So if I receive 10,000 rupees as a consideration, which includes tax, and assuming the rate of tax is 18%, the formula they have given is 10,000 into 100 divided by 118. I get something called taxable value. So if I want my tax amount, 10,000 into 18 numerator divided by 118. This gives me my denominator. So these are certain valuation rules which were not covered due to paucity of time in the last session, which I felt let me cover in this particular session. I'll come back to this today's topic called registration under GST law. Prior to starting with this particular session, there are a couple of questions in the question window posted by Namita. I'll take up those questions and then let us have today's discussion. The first question is in relation to Section 13 of IGST Act, which determines with the place of supply. Namita asked this question saying that, sir, what if the goods are imported into India? After importing, a repair activity has to be done on these goods. This goods, after repair, needs to have a test run in India. So because the goods have been imported into India and have not been sent back after repairs, rather it was put to use in India, then my place of supply happens to be India. Service provider is in India, place of supply happens to be India. Her question is, so if I get a consideration of say just 10,000 from the customer, I don't get GST paid extra, will it not be undue hardship on the supplier? Reason, if you recollect, just now I was briefing you with respect to Rule 35. So when I talk about Rule 35, I receive 10,000 rupees from my customer. I wouldn't receive GST separately. Now, applying this Section 13, subsection 3 of IGST law, this service provider has to charge GST on those goods. And it is undue hardship. The law is as it is, Namita. We have to go with the law and say that if I have to send back, I don't charge GST. If I have to do a test run, there is a GST which gets attracted. So you have to bear the cost for that particular test run, where 18% GST has to be collected. So to not to have a undue hardship, it is better to recover that money from the customer. Moving on further, in relation to Section 8 of Section 13, subsection 8 of Section 13, Namit is asking this question. What if there is a supply, there is a company called XYZ Incorporated in Singapore, and this particular company has to do a particular contract to another entity called PR Incorporated in Japan. And for doing this particular work, they get a bank guarantee or some services from State Bank of India, which is located in India. What shall be the place of supply? Definitely will be India, because my Section 13, subsection 8 says that the services, wherever is a service provider, that should be considered as your place of supply. Because SBI is in India, place of supply happens to be India. And with respect to this agent, now bill to ship to model, there was one more question from Namita. So what if the agent receives the goods on behalf of the supplier, or agent places an order, like there is a supplier called Praveen. Praveen supplies goods to say Namita. Namita is a principal, or at the instruction of say Priya. Priya happens to be agent. If Namita has received the goods At the instruction of Priya, what will be the transaction? Will it be covered under Schedule 1 of Section 7? I would say yes. Because the goods were received by Priya on behalf of Namita, it will be a principal agent transaction and it shall be deemed to be a supply from Namita to Priya. And it will be covered in the capacity of a distinct person, not distinct person. It will be deemed to be a supply even without a consideration. And further to this exchange of old goods, there was one further question. OLX sells second-hand goods. Well, Rule 32 apply. OLX, now please understand the business model, Namita. OLX is an aggregator and not a person who buys and sells the goods. You have to understand this particular difference. Take example of Amazon, take example of OLX. These entities will be called as a e-commerce operator or a aggregator. Why do I call that? They don't buy the goods in their individual fiduciary capacity. They just arrange a platform. Praveen wants to sell his old used laptop. Namita wants to buy that. Now there is a seller, there is a buyer. We both get connected using OLX platform. So OLX model, this Rule 32 does not get attracted, Namita. These are the questions which are available in the chat window. Now let's come back with this topic for today called registration. Quickly, this particular topic of registration, first and foremost, we'll understand some of the definitions which are relevant for us to deal with this particular topic called registration. We will touch upon few examples why registration is important for us to study, may not only be for the examination purpose, for the career point of view, why we need to understand this concept called registration. And first and foremost thing, I'll put it this way. Whenever you happen to meet whenever you happen to be in a social gathering and your relatives get to know that you are pursuing your chartered accountancy course or you have finished your chartered accountancy course, the first and foremost thing is they come and approach you with their technical questions, either be under income tax or indirect taxation. And GST point of view, registration is one pivotal, very, very important aspect which deals with your assessment and penal provisions. So registration is one entry point where the tax officer interacts with the businessman. So it is very important for us to understand why we need to deal with this registration provisions. And in the process of discussing on this registration provisions, I'll take you through the procedure involved for registration. What are the amendments where we need to make a application for registration? What is the cancellation? Why the registration will be cancelled? How a registration can be cancelled? There's a process called revocation of cancellation of registration. And finally, from examination point of view, a couple of problems have been set for us to discuss. And just for your knowledge, students, keep your institute material handy with you. This particular material, which you are seeing in front of your screen, has been hosted on Board of Studies ICAI website. Along with this particular PPT, I have put a Word document where a couple of questions were put set in this particular chapter called registration. What I will do, end of our this discussion, I'll try to answer all those questions indirectly, and also I'll take you through a couple of live examples where, as and when we discuss, to make you understand better connected with this particular concept. To start with, we will understand definitions which are relevant for us for this topic called registration. First definition, agent, which would have been discussed in many sessions. From registration chapter point of view, please keep in mind, any transactions which takes place, please refer to section 7. Please refer to section 7, read with schedule number 1. Section 7, read with schedule number 1. And also, I would request the students to please make a running notes. Reason, couple of topics are there which you get connected only when you read this particular topics along with other topics for reference purpose. So please make a note in your running notebook. Section 7, subsection 1, clause C. Section 7, subsection 1, clause C. So what is the relevance of this? I refer myself to Schedule 1. I refer myself to Schedule 1. So when I refer to Schedule 1, there is a reference of supply by principal to the agent or supply by agent to the principal. So if the goods are supplied by agent on behalf of the principal, now most of the times we tend to confused. I'm talking to those students who are not well versed with indirect taxation. In your 3 years of articleship, it could have so happened that you would have got major exposure into company law, major exposure into income tax, or your audits per se, who have less interaction with GST law or indirect taxation. You would have asked a question this way. Take an example. Ultratech Cement. Ultratech Cement cannot sell the cement manufactured by itself across India. So what they do, this particular manufacturer appoints dealers, appoints agents across India. So for a moment, assume that I am a dealer. I have my business in the state of, say, Uttar Pradesh. I receive, say, 10,000 bags of cement from Ultratech. I sell, say, for a sum of rupees 2.5 lakh. When I sell for 2.5 lakh, I get a commission point 25,000. Now, when I look into my bank account, there is a credit of 2.5 lakh. This 2.5 lakh, I deposit back to Ultratech Cement. End of the month, you would see my bank account as a dealer. There is a credit of 2.5 lakh. There is a debit of 2.5 lakh. What is that? I received money on behalf of Ultratech for sale of cement bags. This 2.5 lakh, I have put it back to Ultratech Cement. Based on the sales I have made, I get commission of 10%. So I get back 25,000 from Ultratech Cement. So if you ask me to look into the bank statement, there's a net balance of 25,000 at the end of the month. Now, important aspect here is dealer agent means a person who carries on the business of supply of goods or services on behalf of another. That is your principal. So this is a person which is very, very important with when you read with your section 7, subsection 1, clause C. Why is it important? Sir, why I have to refer to this thing? Because my section 7 read with schedule 1 has brought a deeming fiction saying that any supply between principal to agent for the purpose without consideration, and the agent who has sold the goods shall be considered as a supply. So when I look into my transaction, 2.5 lakh is the money which I have received. That will be considered as my supply value. This is very important point from my indirect taxation point of view. Next, this is one definition called aggregate turnover. Very important. Please write down in your working note. I'll explain this slide and I'll come back to my Excel file to solve a problem connected with this particular definition called aggregate turnover. This term aggregate turnover was defined under section 2. This is connected with my registration. So if someone wants to examine, should I need to get registered under GST law? Someone says 10 lakh is the threshold limit. Someone says 20 lakhs is the threshold limit. Someone says, no, there is no relevance of turnover. If you refer to section 24, a couple of conditions are there by virtue of which mandatorily you have to register. So there are aspects connected with my registration. So for that purpose, I have to deal with this term called aggregate turnover. Second, when I go to section 35, read with section 44, there is something called maintenance of books of accounts and filing of annual return. So when I have to find an annual return, again, I come back to this definition called aggregate turnover to determine what is my turnover for the purpose of filing my annual return. So aggregate turnover, I use it in registration. I also use it for annual returns. So is that the only thing? No, there is something else, something called e-invoice. When I issue a tax invoice under GST law, on the basis of your aggregate turnover, if it exceeds 50 crore rupees in any of the previous financial years, then you're supposed to comply with your e-invoice to be issued. So for these provisions, it is very, very important for us to deal with this definition called aggregate turnover. So it means aggregate of means sum of what? Point number 1. all taxable supplies. In simple term, the supply on which I have paid GST, the supply on which I have paid GST, all that together I call as bucket number 1, all taxable supply. Make a note in your working note. Bucket number 1, taxable supply. Taxable supply. So when I pay tax, there is a question which always comes into many of the students. So there are certain purchases. On those purchases, I was forced to pay tax on reverse charge basis. Should I consider that also forming part of taxable supply? Now the question here, let us take an example. Sir, I am a company. I receive services from a security person. I receive services by way of a transportation, rent-a-cab service. Now, government has notified that on security services and rent-a-cab service, as a company, I need to pay GST on reverse charge mechanism. Now, please tell me, would you call that as a taxable supply? Answer to that question, no, no. All those inward supply, all those purchases on which I am paying tax on reverse charge shall not form part of my taxable supply. So please keep in mind, if I look into my return called GSTR 1 or GSTR 3B, the supplies on which I am paying tax, shall be called as bucket number 1 called taxable supply. So while calculating this bucket number 1, all the inward supply on which I am paying tax shall be kept aside. This is your bucket number 1. Second, exempt supply. Exempt supply, the next slide when we travel, we will see a definition. What is an exempt supply? For a moment, please make a note that bucket number 2, exempt supply, where the tax has been exempted. This is your second bucket. Third, exports of goods or services or both. So during a particular period, if I have made export of goods or if I have made export of services, that shall be considered for the purpose of this aggregate turnover. The question comes here. So when you say exports, should I take into consideration zero rated supply, that is actual physical exports and SEZ supply, or is it only actual exports out of India? Now, exports of goods or services are both, they say. Now, when I consider the definition called zero rated supply, all my supplies to SEZ unit, SEZ developer shall form part of my zero rated supply. So for the purpose of this particular definition, you can either fit this SEZ supply into bucket number 1 or bucket number 3. It doesn't change your interpretation. So for simple understanding, all your zero rated supply, which was defined under IGST law, can be considered for this third bucket called exports. So when I refer to the term called exports, please refer to SEZ unit or SEZ developer supplies and actual exports. All this let's call as third bucket. Last and final, interstate supply of persons having seen PAN. This is in simple terms stock transfer. If you remember, go back to your schedule number 1. In schedule number 1, where there is a supply between distinct persons without consideration, that shall be considered as a supply. So if there is any supply of goods or services from one branch to another branch, or from head office to branch to head office, all that shall also be added back to my aggregate turnover. Now, there are 4 things which I have to include: taxable activity, taxable supply, exempt supply, exports, your stock transfer, interstate supply of persons having seen PAN. And from all this, I have to exclude CGST, SGST, IGST, or cess or UTGST. Any tax which is collected under GST law shall be kept outside. Please keep in mind, this is my exclusion for the purpose of aggregate turnover. So why is that we need to pay so much of attention to this particular definition? Reason, calculation of your turnover. In addition to this, couple of areas we fall back to this definition. For that purpose, I would stress on this particular definition called aggregate turnover. Now, coming back, I was talking about something called exempt supply. I was talking about bucket number 2, which is called exempt supply. So what is an exempt supply? Exempt supply is nothing but supply of goods, supply of services, or both. Where there is a nil rate of tax or the supply is wholly exempt. There is a nil rate of tax or supply is wholly exempt. In your working note, make a reference, notification 2 of 2017 02/2017 CTR central tax rate, comma 12/12 of 2017 12/2017 CTR. Now 2 of 2017 deals with goods, 12 of 2017 deals with your services. So when I look into this notification 12 of 2017, all the rate of tax will be shown as nil. That is the reason they have referred to something called nil. And when I refer to this notification 2 of 2017, they say by applying section 11, the goods are wholly exempt from payment of GST. So this term called nil rate or wholly exempt, wherever it is applied, wherever it is applicable, those goods or those services shall be called as exempt supply. When you read this definition, there is a reference called and includes non-taxable supply and includes non-taxable supply. So what is the importance of this term called non-taxable supply? This has been defined saying that supply of goods or services which is not leviable to tax, So where do I find this not leviable to tax? If you refer to section 9, which deals with the levy, as on today, supply of alcoholic liquor for human consumption, supply of petrol and diesel. Now, these are the two entries which have been kept outside the levy of GST law. So for the purpose of your second bucket, which you have written just a while ago, my second bucket includes exempt supply. In addition to this, something called non-taxable supply. What do you understand by non-taxable supply? The supply of goods or supply of services which are kept outside the purview of levy. What is it kept outside? Petrol, diesel, and alcoholic liquor. These are the activities which are forming part of my exempt supply. So this is one definition which we need to understand with respect to section 2, subsection 6. Now, let me come back to my Excel file to make you understand why is that we need to stress on this particular element called aggregate turnover. Students, hope you are able to see my Excel file now. Please confirm. Hope you are able to see Excel file. Let me have a confirmation, then I'll move on with the discussion. Great. Yes, thanks for the confirmation. Now, let us understand this particular term called aggregate turnover. Now, please keep in mind, I'm talking to those students who haven't done GST audit, who haven't have exposure for GST returns, annual returns filing all along. Now, imagine your profit and loss account. My profit and loss account on the credit side of P&L account, there is something called income which is shown. Income direct from operations, indirect income, which is directly not connected with your operations. Maybe your bank interest, maybe your discount received or insurance claim, etc. So there is something on the credit side of P&L which we refer to as the income. Now that is something which is generally connected with this aggregate turnover, which is again disclosed in my GST returns. And if you look into your GST returns, I have something called taxable, exports, and non-GST supply. So if anyone looks into GST 1, these are the three buckets where I show my details of transaction. So for simple understanding, let us say this particular sale of goods are taxable, petrol and diesel exempt supply. Why exempt? Non-GST supply. Non-GST supply forms part of my exempt supply. Interest on fixed deposit exempted by way of a notification of 12 of 2017. So again, I call this as exempt. Training fee received, let me say taxable. Duty drawback received. Now this is the incentive which has been received. It is neither a supply of goods nor supply of services. So I call that as a non-GST item. Now, when I file my GSTR 1, What I'll do, I'll show taxable turnover, this plus 3.8. This is my taxable turnover. With respect to exports, there is no exports in the month, I'll say 0. And with respect to non-GST, I'll add here exempt plus non-GST supply. So what is my exempt plus non-GST supply? I'll show this plus this plus this. Now, this is my presentation. This is my presentation for the purpose of GST law. For the purpose of GST law. This is picked up from my signed financials or from the financials and presentation done in my GSTR 1. Now, how do I calculate my aggregate turnover? How do I calculate my aggregate turnover? Now, aggregate turnover, please recollect your buckets. Bucket number 1, bucket number 2, bucket number 3, bucket number 4. Taxable supply, exempt supply, zero rated supply, interstate supply. Now, if someone asks you to calculate your aggregate turnover, what we will do? Taxable supply, we will just add this plus this and say this is my taxable supply. What is a exempt supply? We will add this plus this, say that this is my exempt supply. And my taxable turnover and my exempt supply. My zero rated supply, 0. What is the interstate supply? That is stock transfer from the P&L, assuming that nothing is there. This happens to be my aggregate turnover for the purpose of GST law. Now, students, please look at your returns under GST law, income from your P&L account and aggregate turnover. If you understand all these transactions together, my aggregate turnover is 125 lakhs. However, I present my P&L account in my GST returns in this particular fashion. Hope this is clear. I start with calculation of aggregate turnover in this fashion. Now, this will not be expected from your examination. Slightly, there will be a complexity. Slightly, there will be a additional calculations brought in. Now, let us understand those additional calculations. Now, I bring in additional information for the purpose of disclosure in GST returns for the purpose of my aggregate turnover. First transaction, stock transfer. So there is a stock transfer to other branch to the tune of 20 lakhs. Freight charges received for say 2.8 lakh. Recovery from vendors say 3.2 lakh. Commission received for say 12 lakhs. Okay. Assuming that when I deep dive into the financial statements, there is a stock transfer from one branch to another branch. What is this transaction? I'll put it this way. Sir, during the month, there was a transfer of capital goods from this branch to another branch. What was that? So there was a purchase of laptop. My head office has given an instruction to buy 10 laptops for another branch. So what I did? Balance sheet movement. I purchased laptops. I've shown in my fixed assets in my balance sheet. And at the instruction of head office from one branch to another branch, I did a stock transfer. Now, question comes here. Stock transfer. Will it be there in your consolidated financial statements? Sale from transfer from one branch to another branch? Not a sale. Refer to your accounting standard 9, sale of goods Act, not a supply. But my GST law says that section 7, subsection 1, clause C. When I refer to schedule 1, all your stock transfer will be considered as a supply without consideration between distinct person. Now, this particular thing I need to disclose in my GST returns as taxable supply. Now, the moment I say taxable supply, in bucket number 1, I add this particular element called 18 lakhs. Moving further. There is a, just give me a minute. There is a freight charges received for rupees 2 lakh. What is that? Assuming that there is a transaction where when I sell the goods to my customer, along with the sale, I recover freight charges from my customer. Now, this money which I have received, which I have recovered from my customer, though I net off, I present in my financials where I show freight expenses, less freight recovered. So I show net freight charges in my P&L account. But for the purpose of GST law, any money which is received, please remember section 15, please remember section 15, where there is something to be added back, incidental charges. So if I have added back those incidental charges, which is in relation to supply, I have to add back. So what happens here? This 2 lakhs happens to be supply. For the purpose of my taxable supply in GSTR1, I add 2 lakhs. And this particular 2 lakhs gets disclosed. This stock transfer erroneously I brought in here. My stock transfer should be brought here 18 lakhs. I'm correcting my error. This stock transfer for the purpose of 2/6 aggregate turnover will be in bucket number 4. And this 2 lakhs which I have recovered, I'll add it to my taxable supply. So what I'll do here, I'll add 2 lakhs freight charges over here. So what I'm doing here, first transaction, that is your stock transfer, 18 lakhs, has to be considered in GSTR1 for taxable supply. And for the purpose of your aggregate turnover, I'm considering in your bucket number 4. Similarly, freight charges received, I'm bringing over here, saying that 2 lakhs is my money to be considered as taxable supply, bucket number 1. Next element, recovery from vendor. There could be some business scenario where vendor did a default in supplying the goods in timely manner. I recovered by way of 2.85 lakh. As per Schedule 2, it is called as a service, supply of service, activity to abstain for doing or activity of tolerance is deemed to be a supply. So from virtue of that, this 2.85 lakh, which I've recovered from the supplier, will also be forming part of my taxable supply. So what I will do, for GSTR1, I'll show 2.85 here. And the purpose of your taxable supply, bucket number 1, 2.85. This is my aggregate turnover. Moving on further. Now this is a crux of your issue. Majority of us, when we look into the profit and loss account, now there is a commission received for 10%, amounting to 12 lakhs. How did I receive? I as an agent, I received the goods, I sold the goods to the customer. I repeat, I as an agent, I have received the goods from principal, I sold the goods to the customer, and I've showed 12 lakhs in my P&L account. Now question comes here. Will 12 lakhs be considered as income or the value of goods which I have supplied? 12 lakhs divided by 0.1, I have 120 lakhs. 120 lakhs money received, on behalf of principal, and I remitted back. For doing this particular activity, I received a commission called 12 lakhs. What should I disclose in my GST returns? Now, please remember, when I look into final profit and loss account, only 12 lakhs will be shown because this 120 lakhs is not my money. But for the purpose of GST law, I'll add first thing 120 lakhs as the value of supply plus the accrual entry posted as per accounting standard 9 for 12 lakhs receivable from principal. This also will be forming part of my taxable value. This is for GSTR1 purpose. So what will happen to my aggregate turnover? For aggregate turnover, first I'll add 120 lakhs. Why? I as an agent supplied goods worth 120 lakhs. So I add this 120 lakhs and also I add 12 lakhs, which is the accrual entry booked in my books of accounts as income due but not received. This will be forming part of my aggregate turnover. Now, please look at your financial statements. My financial statements consist of 125 lakhs plus an accrual entry of 12 lakhs. Now, this is shown in my profit and loss account. This is shown in my profit and loss account. But what happened? For the purpose of aggregate turnover, my aggregate turnover as per GST law happens to be 279.85 lakh. So the turnover for your financials, the turnover for GST law is completely different. This is how my aggregate turnover comes into picture to make you understand why is that we need to study this particular definition, how this four buckets needs to be applied. Moving on further, the term called agriculturist, one of the important term either under income tax law or under indirect tax law. Agriculturist is a person who is an individual or a HUF who undertakes the cultivation. So if this particular individual or HUF undertakes the cultivation activity for the purpose of growing using his own labor or his family members or servants under the supervision of this particular individual or HUF, that particular person will be called as agriculturist. Why is that we are studying? The income, the supply which happens by way of agriculture is kept outside the purview of GST. So for the purpose of registration, if I have any money received by virtue of agriculture produce, that is kept outside the purpose of my GST registration. So for the GST registration point of view, this term agriculturist is important. So what happens to the money received? Please refer to your exempt supply. Because it has been considered as exempt supply, it forms part of my aggregate turnover. Please apply your logic under income tax. For determining your taxable income, what we will do? We will add all the income, including your agricultural income, and reduce your applicability of your IT return filing, various things. I add agricultural income and again I remove. Similarly, for the purpose of aggregate turnover, this forms part of my exempt supply. The third definition is your CTP, casual taxable person. This CTP refers to a person who occasionally undertakes the transactions of supply of goods and services. I'll give an example. Most of you would have noticed that there are certain businessmen, I would say tradesmen, who move from one state to another state. Take example of your sale of sarees, sale of your food items, sale of your garments. Now, this industry, like saree or garment industry, the people move from one place to another place. A typical example. When we talk about garment industry, there are many businessmen who migrate who come from Rajasthan to the southern part of India. The person carries along with him a bunch of goods to state for the purpose of executing a sale. Now, the typical importance of this particular person called CTP, this person doesn't have a permanent place of business in a state where he undertakes the transaction called supply. I'll give a typical example for you to understand this CTP. COVID, pre-COVID, now COVID has changed the business the way it was happening. If you happen to visualize your pre-COVID scenario, I'll give an example of this entity called Infosys. Infosys has got presence across India, and part of their business activity, they encourage women entrepreneurs. So what they do, they have a particular place earmarked for women who do a business activity of buying the cloth, designing the cloth, and developing the material out of that. So those women entrepreneurs who have a skill of converting and putting design on these garments and who sell the garments, they encourage for them to open stalls in their particular business premises. Now, part of that, there is something called Mela. Like, it will not be around the clock. Occasionally, in 1 or 2 months, in a particular quarter, there will be a permission given by the management. So, if if someone happens to be into this business, say, take example of mine. I have my business, say, in the state of Tamil Nadu. There is a Mela which is happening in, say, Mumbai. So what I do from Tamil Nadu, I pack my material, I pack my goods, I go and participate in this particular business Mela which is happening in Maharashtra, Mumbai. So when I visit Mumbai, I don't have permanent place of business in Mumbai. I was there as a guest for some point in time. I go there for the purpose of business. I carry with me some goods or services. I supply the goods and services in that particular state. So this CTP refers to a businessman who undertakes the supply of goods or services in a state or union territory where he doesn't have a fixed place of business. That is referred to as CTP. Why is it so important? When I go to further slides where it deals with your registration concept, you understand why this CTP is important. Now, this is one particular business model, very effective business model, which you can suggest to some of your clients depending on the nature of business they undertake. Moving on next, fixed establishment. Fixed establishment is a particular establishment, like we have discussed this particular fixed establishment in connection with a place of supply provisions. So if I have a registration say in Bihar, I register myself say in Patna. I have one more location say in another district of Bihar. So when I have my presence in two districts, so those two presence will be called as a fixed establishment of an entity. So branches within the state I refer to as a fixed establishment. Then the next definition called NRTP. NRTP is a person who visits India, who supplies goods or services, and he does a business on an occasional basis, who doesn't have any place of business in India. This is called NRTP. So these are a couple of definitions which are relevant for us to understand. Taxable person means a person who is registered or liable to be registered. Namita, one of your question is connected with this definition. Taxable person, if you refer to section 122, which deals with your penal provisions, if you refer to section 25, which deals with your registration related provisions, they don't refer to a term called registered person. They refer to a term called taxable person, who is a person registered or liable to be registered. So if I am registered under GST, I'll be a registered person. What if I have done business, though I'm liable to register but not registered, but then also I'll be called as a taxable person. So this is one definition which is relevant. When you read the BEAR Act, you come across these terms called person, taxable person, registered person. Depending on the language used, the applicable provisions will be analyzed in conjunction with that particular term. So here for me, when I refer to the taxable person, this is what we need to understand. Now, there is one more definition called turnover in state. This turnover in state is in simple terms referred, or it contains to the turnover in a state. If you recollect the Excel file where we have discussed a problem, all the transactions, what we have done at an entity level, that is called aggregate turnover. The same formula, bucket 1, bucket 2, bucket 3, bucket 4. These 4 buckets, I do restrict myself to a particular state or a union territory. That will be called as turnover in state. So why do I need to study this definition? When I refer to section 20, which deals with your ISD concept, which deals with your input service distributor, that point in time, this turnover in state is relevant for ISD. So for simple understanding, you remember that my turnover, aggregate turnover, the same definition, if I curtail all that explanation to a state, to a union territory, that's called turnover in a state or union territory. Now, these are a couple of examples which are relevant for you to understand. Now, before I get into the main crux of my registration, couple of examples are there, just a food for thought for you to understand how I need to visualize those particular provisions and get into the solution of those particular problems. Let's start this way. Mr. X, an individual who is residing in the state of Maharashtra. This particular gentleman has approached with certain information to examine whether he has to get registered under GST law. First information, income from salary, rupees 120 lakhs. Income from salary, rupees 120 lakhs. The moment we see this term called income, refer to schedule number 3. Please make a note in your working note. Schedule number 3, transactions. Schedule number 3, transactions. Not to be considered as supply of goods, not to be considered as supply of services. Make a note, schedule 3 hyphen, not to be considered as supply of goods nor supply of services. Now, it is neither a supply of goods nor supply of services. So when I say that, it doesn't fall under bucket 1, taxable supply, under bucket 2, exempt supply, under bucket 3, exports, under bucket 4, interstate. So any transactions which are referred in schedule number 3, that does not form part of my aggregate turnover. So why do we need to understand? When I move further to read the definitions of registration, for aggregate turnover, I keep Schedule 3 outside. Income from rental income. The moment information comes, please don't jump into conclusion. Get into the aspect of understanding. Sir, is there any exemption? Is there any taxability? The moment I say rental income, is it a residential income or is it a commercial property? If it is a residential property, exemption is there. If it is a commercial property, it is a taxable activity. Moving further, income from mutual fund rupees 25 lakh. If you read the definition of goods, if you read the definition of services, definition of goods exclude securities. Definition of services exclude security. So my securities is neither goods nor services. Securities is neither goods nor services. Please make a note in your working note. Write down. Rule 45. Rule 45 hyphen. Read with section 17. Read with section 17 within brackets 3. Read with section 17 brackets 3. Hyphen exempt supply. So now if you read this rule 45, which deals with your input tax related provisions, my sale of immovable property, my sale of securities. I repeat, sale of immovable property, sale of securities. These two items actually is forming part of schedule number 3. Now these two transactions only for the purpose of input tax reversal is considered as exempt supply, but not for the purpose of your aggregate turnover. So when I say income from mutual fund, this is an income derived from security, which is not a supply of goods nor supply of services. So I don't take this into consideration for my section 2 clause 6. So this also gets away. Now these examples is just a food for thought how you visualize this particular provisions. Moving on, a businessman from the state of Odisha has approached with the following information. Agriculture produce 100 lakhs. As I say, for the aggregate turnover, it enters the calculation and excludes for the purpose of tax levy. Income from rent of a space provided for storing agriculture produce. In addition to agriculture produce, I have a warehouse. I give it for warehousing of the agriculture produce. I received 50 lakhs. Now, this agriculture produce, which is used for a warehouse, that particular cold storage, this is exempted under GST law. So any services I do in relation to agriculture produce, that is your warehouse or storage, is exempted from GST law. So now point number 1 enters into your bucket number 2. Point number 2 again enters into your bucket number 2. Moving on further, income from transportation of goods as GTA, 15 lakhs. Now, this is very important. Income from GTA, like goods transport agency, this is a taxable supply. The tax on which is paid by the recipient of service. Now, for a moment, for the purpose of aggregate turnover, I would call that as a bucket number 1, taxable supply. Okay, I'll skip this example. This I have discussed in my example, so I'll skip this one. CTP I had discussed, so I'll skip this particular example. Now, let's move on to the crux of my section 25. Before I start with this particular thing, let me see quickly if there are any questions so far on the examples we have discussed. Namita has a question with respect to this agent. Priya happens to be agent, instructs Tejo. Okay, Priya is giving instruction to Tejo to deliver goods to Namita. So if Priya is recipient, then will it violate para 3 of which section 7? As Priya can't issue invoice on its own. Priya, Namita, there is a supply of goods from Tejo to Namita, but actual delivery happened to Priya. So here, in turn, Namita has to raise the invoice on Priya. Please understand, Tejo is a supplier. The physical delivery happened to Priya. At the instruction of Namita. Now, Namita has to raise the invoice on Priya for that particular goods which has been transferred by Tejo to this particular person called Priya. Now, if you see bill to ship to model, Tejo will raise a bill on Namita. Now, what Namita will do, she cannot hold the title to those goods. Namita, in turn, has to raise a bill on Priya. This is the answer to your question, Namita. Before passing GST law, government doesn't ask us why we take registration in it. It doesn't ask. When we read the GST provisions, we understand that, Priya. I'll take you through those provisions. Namita says alcohol is outside chargeability of GST, so it can be exempt supply. As it, okay, non-GST supply. A good question, Namita. The question from Namita, for the benefit of other students, what Namita says, sir, alcohol is kept outside the GST. When I read my section 9, subsection 3, it says, other than alcoholic liquor for human consumption. How can you call that as an exempt supply? Now, when I read the definition called exempt supply, my exempt supply includes non-GST supply. What is a non-GST supply? Supply of goods or services which is not subjected to, not leviable under GST. Now, because alcohol is not leviable to GST, that is called non-GST supply. Do you agree with that, Namita? Alcohol, petrol, diesel is called as a non-GST supply. Why? It is not subject to GST. That's why I call non-GST supply. If you say yes, then that non-GST supply is added in exempt supply definition. For that purpose, I bring it back over here. Tejo says, my video is covering the Excel screen. Okay, I'll take care of that, Tejo. Excel, whenever I come to Excel, I'll ensure that this Excel file is properly visible. Then further, Namita says, if we add 120 lakhs, then every agent will come mandatory. That is the concept of GST law, Namita. That is the concept. Now, Namita says, if you recollect our example of this Excel file, let me come back to my Excel. The question here, what Namita says, see, when we prepare financial statements, 120 lakhs is the money received by the agent. Unfortunately, this 120 lakhs is given back to the principal. So if you look at the bank account of the agent, credit of 120, debit of 120, net 0. By virtue of your contractual obligation, you book a commission receivable. I calculate 10% on 120 lakhs and say 12 lakhs is my income receivable. So what I do, I as an agent, I raise 12 lakhs plus GST of 18%. Now the question from Namita is, when I get into this mode, all the agents invariably get into the purview of GST. Answer is a big yes. Answer is a big yes. Why they have brought in this concept, why they want to get into this, please remember the cardinal principle of GST law. No cascading effect of taxes. And also GST collected on destination basis. Now, these two principles are relevant, Namita. If you understand pith and pin the logic behind these two provisions, then I would say you have understood this particular. You'll appreciate why my agent was brought into the taxation purview. So, answer to your question, Namita, is in these two particular points. I think, sorry, it was, Namita who has raised. Then Suraya has next question. Can the commission receivable by the agent adjusted against the amount remitted to principal towards supply? Expected question, Suraya. Now what Suraya says, sir, when I receive 120 lakhs, I pay back 120 lakhs. Again, I wait for receiving 12 lakhs. Instead, can we do this way? I receive 120 lakhs, I retain 12 lakhs, balance 108 lakhs, I will pay back to principal. Absolutely okay, Surya. I don't mind with that. For the purpose of GST, 120 should figure, the 12 lakhs also should figure. That is what we need to understand. And again, when you look into the GST balance sheet, no, there is no balance sheet under GST, but for you to understand, there is an inward supply 120 lakhs, there is an outward supply 120 lakhs. Now please visualize your GSTR 3B. In GSTR 3B, you will show your sales of 120 lakhs plus 12, 132 lakhs, your purchases of 120 lakhs. Now, if you look at the standalone transactions from 132 lakhs, that is your tax, and purchase is 120 lakhs. If I net off, I have a net result of 12 lakhs. Suraya, this is the concept of my GST law, but presentation is done in a different fashion. So I can retain that 12 lakhs and give it back only 108 lakhs. Absolutely okay with that. GT is taxable under reverse charge. First question, Amita, is it taxable? Yes or no? If it is taxable, I'll put into bucket number 1. That's all. Mutual fund need not be added to aggregate turnover. Why we don't add it in the example? See, mutual fund, from where do I get that money? Sale of mutual fund. What is a mutual fund? Right created by virtue of my Security Transaction Act, Securitization Act. By virtue of a Securitization Act, an instrument where right was created in the security is kept outside the definition of goods, services. When it is neither goods nor services, it doesn't fit into the definition. It fails to get into the addition. Bucket number 1, taxable supply, not goods, not services, gets out. Bucket number 2, exempt supply. Exempt supply where it is wholly exempted or rate of tax is nil. Now, when it is not a goods, not a services, where is the question of your exempt supply? Bucket number 3, exports. Mutual funds I cannot consider correlate with exports. Stock transfer, not a stock transfer. So for the purpose of my aggregate turnover, Namita, it gets out of my turnover. Only for the purpose of Rule 45, that is your input tax reversal under Section 17, subsection 3, I use land, that is sale of immovable property, and your securities. Next question. In aggregate turnover, 120 lakhs is not mentioned. Aggregate turnover definition, 120 lakhs is not mentioned. No, in aggregate turnover, Namita, I have to include 120 lakhs. I have to include 120 lakhs. I have to include 12 lakhs. This is what we need to understand. Coming further, let's start with this provision called special category states. Special category states. Now, when you look into Article 279, these 11 states are called special category states. Why? They have given this status called special category under Article 279A just to give certain relief, just to give certain benefit for various provisions concerned. When I read my GST law, that is section 22, please keep in mind, out of these 11 special category states, there are only 4 states called Manipur, Mizoram, Nagaland, Tripura. In your working note, please make a note. Section 22 hyphen special category states. MMNT. M for Manipur, M for Mizoram, N for Nagaland, T for Tripura. Mani, Mizo, Nagaland, Tripura. MMNT. Examination, any question in connection with your special category states, please remember only these 4 states. Though my Article 279A has got 11 states, when I talk about registration related provisions, Section 22 has considered only these 4 states. What is that? MMNT. Mani, Manipur, Mizoram, Nagaland, Tripura. MMNT. Now, this is a shortcut which you need to keep in mind for the purpose of your Section 22. Now, moving on further. Now, the starting point when I talk about registration, whoever is asking a question, so what is the basis for me to check whether registration is applicable or not? First and foremost, we refer to this provision called Section 22. So this provision says other than special category states. When I say special category states, only 4. MMNT. Manipur, Mizoram, Nagaland, Tripura. So other than special category states, where every supplier shall be liable for registration in a state or union territory where supply of taxable goods or services is made if the aggregate turnover exceeds 20 lakhs. Now, what they say, where supplier in a state or union territory from where that's a particular taxable supply from where this particular taxable supply is being made in case aggregate turnover exceeds rupees 20 lakh. Where aggregate turnover exceeds rupees 20 lakh in a financial year. Now, let me come back to my Excel file to make you understand this particular provision. Section 22. Section 22. Other than special category states. Taxable supply made where aggregate turnover, I use the abbreviation called ATO, aggregate turnover, exceeds 20 lakh. Now, this is my definition. Let us assume that rental income say 15 lakh, interest income say 3 lakh, and sale of goods say 3 lakh. Total 21 lakhs. Now, first question, what is aggregate turnover? Is it 21 lakhs or is it 3 lakhs? What is my aggregate turnover? Is it 21 lakhs or 3 lakhs? Now, before you answer this, I'll put it this way. Say exempt, rental income is exempt, interest income is exempt, sale of goods is taxable. Now, out of 3 transactions, what was given to us? 2 transactions are exempt, 1 transaction alone is taxable. Now, given this transaction, what is my aggregate turnover? Is it 21 lakhs or 3 lakhs? What would be your answer? What would be your answer? 21 lakhs or 3 lakhs? My aggregate turnover is 21 lakhs. Absolutely correct. Here, though taxable value is 3 lakh, my aggregate turnover is 3 lakh, 21 lakhs. So this is my aggregate turnover. Now, I have to get a registration when aggregate turnover exceeds 21 lakhs. Question may be asked, sir, I'm supplying sale of goods only 3 lakhs. Why should I not take entire till I exceed 20 lakhs? Let me enjoy my exemption. If you see the balance income, it is not taxable. Why are you forcing me to get into registration? So answer for that will be, they say, look, you pay tax only on taxable turnover. You pay tax only on the taxable turnover. But keep in mind, the moment you exceed 20 lakhs, please get registered and start paying tax. Now again, many questions come for many of us. So till December 21, 18 lakhs is the turnover. From Jan 21, it is likely to exceed 20 lakh. Now, should I pay tax on? Now the question comes when this transaction, this scenario is there. The question comes, sir, should the person pay tax from Jan 22? Should the person pay tax from Jan 22 or pay tax on turnover till December 21? Very simple question. Without registration, I cannot collect tax. Without registration, I cannot pay tax. So what happens here? This transaction till December 21 is irrelevant to me. So I pay tax only from Jan 22 where I'm exceeding this threshold limit of 20 lakhs. I'll come back to my presentation. Now, continuation. What happens in case of a special category states? This term 20 lakhs should be read as 10 lakhs. So any state or union territory where the taxable value of goods or services is made, I have to get registered only if my aggregate turnover is exceeding 10 lakhs. Now, I'll come back to my Excel file. Please understand this question carefully. Example 1. I'll say Tripura, Karnataka. Sale of rice, rental income, then interest. One more, sale of vehicle. Now, in Tripura, 2, 3, and 4, sale of vehicle 0. Karnataka, 12, say 4 and 1. Now, I'll make it easy for you. Sale of rice exempt, rental income exempt, interest income exempt, taxable. Now, I'll put the total here. Now, please give your answer for Tripura. For Tripura, is section 22 applicable? Yes, then registration required. Yes or no? Registration requirement as per section 22. As per section 22, for Tripura, what will be answer? For Karnataka, what will be answer? I'll give you 2 minutes. Please carefully apply your special category states and then think and answer. Tripura, what would be your answer? Karnataka, what would be your answer? Tripura, what would be your answer? And Karnataka, what would be your answer? Please keep in mind, out of all the transactions, only sale of vehicle has been held to be taxable in nature. Tripura, section, Namita says, Tripura, section 22 is not applicable. Janaki says, not required for Tripura and Karnataka, both perfectly correct. I agree with Janaki, but what she says is, registration not required. For Karnataka, registration not required. So why is that so? In case of special category states, 10 lakhs. In case of other than special category states, 20 lakhs. This is my analysis of provision, right? So this is the answer for section 22. This I call as example number 1. Now, slightly, I'll alter this example number 1. Let me take the advantage of making a modification. I'll call this as example number 2. In example number 2, I change this as 1 lakh. I change this as say 1.2 lakh. Now, what would be our answer? What would be our answer? Example number 2, Tripura is 10 lakh, Karnataka is 20 lakh. What would be our answer? When you are giving your answer, please mark example 1, example 2 so that I'll have an easy thing to correlate with your answers. Durgara, another 10 minutes, I'll come back to your question. No? Give me 10 minutes. Surya says, for example number 1, no registration required for both the states. Okay. Let me have answer for example number 2. Example number 2. For example number 2, Janaki says required for both. For Janaki says required for both. Okay. Let me wait for another one student to answer. Durga Rao, Tejo, Namita. Priya says, for example number 2, no registration because Tripura turnover not exceeding 10 lakhs and Karnataka not exceeding 20 lakhs. Surya says not required for both the states. Absolutely correct. Now, when we talk about this registration, please keep in mind, they have used a language, turnover exceeds. They use a language, turnover exceeds. Now, this 20 lakhs and 10 lakhs, I have to exceed. Then only I have to get into registration. When I'm at the benchmark, when I'm at the threshold limit, always remember, only when I exceed the threshold limit, I need to get registered. Otherwise, not required. So, Priya, to that extent, you have to correct your answer. Coming back. Now, I was talking about 20 lakhs. I was talking about 10 lakhs. Now, there is a recommendation by the government, GST Council. Please remember, under GST law, any changes which are made to the GST law, those are as per the recommendations of the council. So, in case if there is a recommendation by a council, and if this particular special category states, I'm okay with the recommendation made by the council, the current limit of 10 lakhs may exceed up to 20 lakhs. Similarly, in case of a in case of a goods, where if there is a recommendation made by the council only in relation to supply of goods, this turnover of 20 lakhs can be exceeded to 40 lakhs. And please keep in mind, this 40 lakh is only in relation to exclusive supply of goods. Only supplier of goods. Now, if you recollect, in special category states, 10 lakhs can be enhanced to 20 lakhs, where council makes a recommendation. This recommendation will be considered by the government, and the respective states of that particular special category states will agree for the council recommendation. Then that 10 will be made to 20 lakhs. In case of other than special category states, this 20 was made to 40 only for supplier of goods. Now, when we talk about this, sir, what happens to the services? What if I have some services? So if I have some services, then they say, please refer to this explanation. What they say, any money I received by way of interest income, which is an exempted supply, only exempt supply by way of interest or discount is allowed. Other than that, nothing else is allowed. So they say, where a council makes a recommendation and a couple of states have agreed for this particular recommendation, then this 20 lakhs can be enhanced to 40 lakhs, and that particular 40 lakhs will be accepted by respective states. Everyone refer to page number 9.14 of Institute Material. Refer to 9.14 of Institute Material. They have given various states where currently, as on today, where this turnover of 40 lakhs is applicable in case of your goods, and where this turnover of 10 lakhs is applicable in case of a special category states. So with reference to this slide, this particular slide, I draw your attention to page number 9.14. 9.14. Slide number 18 of my presentation, reference to page number 14, 9.14 of your Institute Material. Before I move further, let me see quickly a couple of questions a day. I'll answer that and I'll come back. Okay. Now, Namita is asking a question. This is one question which I have to answer. Namit, first I'll read the question and I'll make you understand on this. What she says, so when I do aggregate turnover calculation, first bucket called taxable supply. In this particular taxable supply, I exclude the turnover on which, where inward supply on which I'm paying tax under reverse charge. So in case of a GTA, why are you including that? That is a question which Namita is asking. Please understand, aggregate turnover. Now, Tejo, I have kept into consideration your request, ma'am. Hope your this Excel file is visible. Bucket 1, bucket 2, bucket 3, bucket 4. Now, I call this as taxable supply, excluding inward supply on which tax is paid on RCM basis. Bucket 2, exempt supply. Bucket 3, export. Bucket 4, your interstate supply of same pan. Now, question from Namita is, so when you're talking about this, there was an example called GTA. In one example, one of the example I say 15 lakhs is a turnover. Now, service provider, service recipient. The service provider is Mrs. XYZ Transport, and recipient happens to be Mrs. ABC Private Limited. Now, Namita, please keep in mind, ma'am, when I do aggregate turnover, now this ATO calculation in whose books I am doing. If I am doing now aggregate turnover in whose books I am doing. If I am doing in the books of XYZ, GTA to include. If I'm doing in the books of, in the hands of ABC Private Limited, GTA to exclude. Now, from XYZ point of view, it is a supply which is taxable. But government, what they have done, this supply was notified under 9(3) where instead of me paying the tax, my recipient is supposed to pay tax. So here, while calculating bucket 1, what they say, exclude those inward supply on which tax is paid on RCM. Now for XYZ transport, this GTA 15 lakhs is not a expenditure. It is a revenue. It is not an inward supply. Reason? Not a inward supply. Yes, a inward supply. Now, I as a taxpayer, when I'm paying tax, you need to understand that if I have income on which tax is applicable, I put into bucket number 1. But assuming that if this is looked from a service recipient point of view, who is paying tax on reverse charge basis, then this should be excluded from your bucket number 1. So this is the answer to your question, Namita. Moving on further, a couple of other questions are there. Let me just see the other questions. Naveen Prakash says, money is also not included in the definition of goods and services, so interest is not to be considered. Money is not, but money has got a monetary consideration, Naveen. See, time value of money, we say. Now, because by virtue of time value of money, any interest which is paid, department has got a consideration, has got a view that interest is an income which is subjected to tax, and that has been brought under exemption list. Now, very good argument. I don't deny with your point of contention. Naveen Prakash says So when you say mutual fund, your money from mutual fund, that is security, is neither supply of goods nor supply of services. So when you say mutual fund is a security, not a supply of goods, not supply of services. Similarly, money is also not a supply of goods, not supply of services. Here, usage of money is something which is being taxed, Naveen. Usage of money for a particular period of time was considered deemed to be a service. Now, the moment they say it is a service, the business gets collapsed by the way left and right monetary transactions happen. For that particular purpose, they have notified that interest or discount received by virtue of usage of money is an exempt service. So they have presumed that usage of money. Now look at from your what you call authorized dealer. For a moment, Naveen, let us look from a banker point of view. I go to bank to exchange my INR to buy US dollar. Now exchange of money is happening. Usage of money, there is a value, there is a service being derived. So this is what government has noticed and say, look, interest income, I'm going to exempt. But exchange of money, where there is a consideration, where there's a gap between what I receive and what I pay, which is identified by way of a commission, that is taxable. So that is the logic why government wanted to bring this usage of money somewhere as an exempted activity, somewhere as a taxable activity. Hope I have clarified your point, Naveen. Namita has one more question. If principal issues invoice of all supplies made by agent, not possible, Namita. Absolutely ruled out. Principal cannot issue on behalf of agent. The concept of GST itself is distorted because destination, consumption-based taxation, the cardinal principle gets failed. So your assumption cannot be accepted. Moving on further. Durga Rao says, what are the taxes on liquor and petrol? There is no tax under GST. This is a exempt supply. So there is no tax on sale of liquor or petrol under GST law. So this is the answer to your question, Durga Rao. Moving on further. Janaki has a question. Job work will include in whose turnover? Wait for 10 minutes, Janaki. I'll answer your question. Wait for 10 minutes. Now, moving on further. So, who has to get registered? Who has to get registered? Now, the answer to that, when GST law was brought in, all the persons who are registered under existing law, that is your present law prior to GST, when they migrate to GST, mandatorily they have to register. So, this is a provision which is older provision. Let's move on further. Now, where registration is required? When there is a succession, when there is a transfer of business. This provision says that, look, where a taxable person who is already registered, and this particular taxable person was transferred, how? By way of a succession. Now, example, many people who are a proprietary concern, they have been exposed to COVID, and unfortunately, God forbid, a couple of mishap happened where the proprietor has met with a death. So when there is a death which has happened, the business always have a continuity where the next generation comes and takes over the business. Where if you refer to the Word document, I'm given one example from this particular slide point of view. For a moment, let us assume that there is a building which is owned by Mr. X. This building, which was owned by Mr. X, he has got a daughter called Miss E. So when X passes on, he has passed away due to COVID on 31st December 2021, and his daughter A takes the possession of that building. The moment, if you see the Hindu Succession Act, by virtue of that particular succession, A gets the right on that immovable property. The moment A gets the right on immovable property, the right to collect the rental charges will also get passed on to A. Now, before death, X happens to be a registered person. So when there is a transfer of business by virtue of succession, by whom? By a taxable person, the recipient, the person who has been called as a successor, who gets the business as a going concern, has to get mandatorily registered under GST law. I repeat, when the succession happens from a taxable person to a successor, that successor has to mandatorily register under GST law. This is your first provision. Second provision. So what if there is a transfer of business? You would have seen that there is a hiving of, there is a demerger of a business. So when there is a transfer from one particular person to another person as a going concern, then the transferee has to apply for registration and is liable for registration. So this particular slide says that whenever there is a transfer, whenever there is a succession as a going concern, then such a transferee or such a successor is liable for registration. Why so? Because prior to transfer, prior to succession, that person is a taxable person. The key over here is taxable person. Because the person is taxable person, by virtue of that provision, the transferee or the successor has to mandatorily register under GST law. Coming back to this example which I gave. Sir, A gets into the possession of this landlord, assuming for a minute, every month there is a rental income of 2 lakhs. And for a moment, let us assume that the rental income is subjected to GST. So Jan, Feb, March, 3 months, if you see, 2 into 3, 6 lakhs is the income. For the purpose of section 22, other than special category states, you say 20 lakhs. So why should A register under GST law? Exception to that 20 lakhs or 10 lakhs is this slide where they say, by virtue of a succession, by virtue of a transfer, there is no threshold limit applicable. By default, the successor or the transferee has to mandatorily register under GST law. This is a provision connection with my transfer or succession. Similar provision, amalgamation or demerger. When 2 or 3 entities merge together, or when there is a demerger of one entity, when there is a court direction or tribunal direction which is approved by your Minister of Corporate Affairs, from the day when this demerger was put forth or merger was put forth, the new entity which comes into existence should also get registered because the predecessor is registered under GST law. Before merger or before demerger, since the person is registered, after amalgamation or after demerger, the new entity which comes into existence, the day when they get into existence, they should apply for registration under GST law. So these are the 2 slides which are exempted to that 10 lakhs and 20 lakhs. Moving on further, I think this question was asked by Janaki. Janaki, you have this question answered here. No? This question is answered here, where they say, for the purpose of section 22, the aggregate turnover shall include supplies of taxable person, whether on his account or on principal. We have discussed this agent concept. So whatever supplies were made by the agent on behalf of the principal, that shall be added to my aggregate turnover. Similarly, the job work. In case of a job work, when the supply happens from the premises of the job worker, value of such goods shall not be included in the hands of the job worker. Rather, this particular turnover shall be added back to the principal altogether. And special category states, as you have seen, out of 11 categories, 7 were excluded. Only MMNT, Manipur, Mizoram, Nagaland, Tripura. These are the 4 states which are identified as special category states. Now, there's one question from Namita, 22.1, explanation to section 22.1. There's no explanation, Namita. Explanation, section 5, there's a explanation. Okay, let's come back. Moving further. Now, we have understood who is the person liable for registration. So, till now, what is the threshold limit? 20 lakhs. What is the threshold limit? 10 lakhs. Transfer or succession, merger, demerger, amalgamation. All this we have understood. And for the purpose of section 22, this principal agent we have understood. This job work, when there is a removal from the premises of a job worker, the sale value will not be added in the hands of job worker, rather it will be added in the hands of the principal. And the special category states, These are the basic provisions which are discussed under section 22. So all along, I'm comfortable to say when a registration needs to be applied. Now, this 23 is a section which is explaining where or a person who is not liable to register at all. This one slide is completely good enough for you to deal with your appeal provisions under GST law. I repeat, all the provisions where a person who is not registered, but the officer says he should register, is discussed under this one slide. So if you understand this particular slide number 23, this is good enough. This is good enough to completely deal with your litigation provisions under GST law, which is dealt with your registration. So first point, it says, if at all, if there is a person who is engaged exclusively in the business of goods, supply of goods or services, which are not liable to tax, Point number one, not liable to tax. What they say? Exclusively. So if there is a supplier who exclusively deals with the supply of goods which are not subjected to GST, not liable to tax, then I need not get registered under GST law. Why not liable? Example, sale of rice. If it is unbranded, I need not pay GST. Exemption is there. Sale of, say, paddy. Again, exempted is there. I'm a commission agent. I'm into APMC yard. I buy this agriculture produce. I sell agriculture produce. I earn commission out of sale of agriculture produce. Again, exempted. So if I am a person engaged exclusively in the supply of goods or services which are exempted, no need to get registered. Example, agriculture produce. Second, wholly exempt from tax under this particular IGST. Now, either it is not liable to tax or wholly exempt. In these two scenarios, I need not apply for GST at all. So please look into your P&L. If I have a turnover where I need not pay GST, then no need to think for registration. Point number two, agriculturist. So these are the two people who have been kept outside your registration. Then, government may, on the recommendations of the council, by notification, specify certain category of persons who may be exempted, from obtaining registration. So here, government was given an authority on the recommendations of the council to exempt some category of persons not to get registered. Examination. Expect a 2 marks question connected with this slide. I have 4 slides which are connected with this particular slide where questions are expected from this particular exemption. So point number 1, recommendations of the council. The person who is supplying the goods or services, the tax on which is to be paid on reverse charge. Remember section 9 subsection 3. Remember section 9 subsection 4. 9.3 deals with your notified list of goods or services. 9.4 deals with your real estate related transactions. Where unregistered, supplier is unregistered, recipient is a registered person. Now 9.3, it is a notified list of goods, notified list of services. I'll give an example. Sir, I'm into business where I'm supplying security personnel. I'm an individual, I'm a proprietary concern. My nature of business is security services. Security services are subjected to GST. But what happened? By virtue of 9.3, section 9 subsection 3, all my supplies, I need not pay GST. My customer, who is a corporate client, have to pay GST. So if at all, I am into that line of function where none of my supplies are subject to tax in my hands, subject to tax in the hands of the recipient, then this particular government has notified by virtue of 5 of 2017 saying that you don't get registered under GST law. Now, Namita, here I draw your attention to this particular slide where by virtue of goods transport agency, for a moment, I assume that I'm XYZ Limited. I am into transportation services. What I do? I have 10 trucks. I assign my trucks to the various business people. Now, when I get into the activity of playing of transportation of goods, it is a taxable activity. no doubt it is taxable. But what happened, by virtue of applying that 9 of 3, section 9 subsection 3, my activity called transportation, I don't pay tax, rather my customer pays tax. Now, because all these particular activities are subjected to GST, it comes into bucket number 1 called taxable supply. But by applying 9(3), look at the flow. Section 9, subsection 1, levy, tick, yes. Section, like I'll go in a hierarchy. How do I go? First, you see section 7. Is it a supply? Yes, tick mark. Come to section 9. Is it subjected to levy? Tick mark, yes. Travel down, 9 subsection 3. Is it under notified list? Put a tick mark, yes. Because it is a supply, because there is a levy, because it is under RCM, I don't get registered under GST. Rather, I get exempted from getting registered by virtue of this notification 5 of 2017. Now, this particular provision was covered in page number 9.21 of your institute material. Second category, job work. Now, job work, a person who is making an interstate supply. Please remember, there is a mandatory registration under section 24. When you come to that section 24, you'll have a better understanding. For a limited understanding here, what they say, a job work, then up to a threshold limit of 20 lakhs, I need not get registered under this particular GST law. Now, please understand that this particular provision, job work related, I'll give an example. Take example of Exide batteries. Exide battery, do the manufacturing of a battery. I'm a job worker. What I do, I have this small cables. Exide gives me lead. Exide gives me plastic. Exide also gives me this what you call connectors. I use the small cable to do the assembling activity. I put that lead into a plastic box. I do the wiring activity. I put that nuts and bolts. I just do that insulation. I do some sort of soldering work, and I make the finished product. Assuming that I'm in the state of Punjab, my Exide is in the state of Haryana. After job work, I send back this material to Haryana. Now, it is an interstate transaction. So if I'm a job worker, not registered under GST law, and I give it to a principal who is registered under GST law, then I need not get registration under this notification 7 of 2017. When I do this particular notification, the threshold limit of 10 lakhs, 20 lakhs, that is a basic threshold limit. Up to 10 lakhs, no need to get registered if it is a special category states. If it is other than special category states, up to 20 lakhs, I need not register. This is my exemption in relation to job work. Now, one exclusion they have said, in case of a job work in relation to jewelry or goldsmith or silversmith, it is not excluded from this particular registration. Means if you're a silversmith and from one state to another state, this jewelry is getting passed on account of job work, mandatory registration is required. Means that 10 lakhs, 20 lakhs is not required. Straight away, if you do interstate supply, you have to get registered under GST law. Next, third category, handicraft goods. Now, every one of us know that certain business is of predominant importance when we consider of a national interest. Handicraft goods are certain goods where, by virtue of section 24, if there is an interstate movement, mandatory registration is required. Now, this particular notification 8 says that, again, by virtue of this government exemption, if there is an interstate movement of handicraft goods, a classic example, I believe everyone has heard this place called Hampi in the state of Karnataka. This is Vijayanagar Samraja. Sri Krishna Devaraya is a king who has ruled, ruled this particular place called Hampi. This particular Vijayanagar Samraja was under the dynasty of this gentleman. Hampi is well known for the handcraft goods, for this toys. If you see the elephant which is carved out of a stone, a beautiful handmade tools which are called handicraft goods. Across India, there are very SME sector which is a handicraft where hand-dependent articles are manufactured. So for encouraging them, this notification says if there is any supply between one state to another state, the threshold limit of 10 lakhs, 20 lakhs is applicable and no mandatory registration is required up to the threshold limit of 20 lakhs. That is what they have said. Why this provision was brought in? When I travel to section 24, which deals with mandatory registration, the moment there is an interstate supply, mandatorily I have to register, where my 10 lakhs or 20 lakhs gets overruled. So to control that particular section 24, government has recommended in case of handicraft goods, though the sale happens between the states, don't levy a tax up to a threshold limit of 10 lakhs or 20 lakhs based on the state from where they hail from. And with respect to this movement of goods, because there is no registration, e-way bill, PAN can be used for the purpose of movement of goods. Now, similarly, even if someone is doing a casual taxable person business, they need not get registered under across India up to a threshold limit of 20 lakhs. Now, this is one important provision which was there under GST law. Services. I was talking about section 24, where a mandatory registration is there. What does the mandatory registration say? You have to get registered under GST if there is any interstate supply. That means 10 lakhs, 20 lakhs. This threshold of 10 lakhs in case of special category, 20 lakhs other than special category. This will be overruled. This will be overruled. This will be overruled when I do a interstate supply. Because I am doing an interstate supply, services needs a relaxation. So what they have done, government has brought in this notification. Any person who is into rendering of services across India, pan India, up to 20 lakhs, he need not register other than special category states, up to 10 lakhs in case of special category states. This is by virtue of, again, section 23, notification 10 of 2017. Similarly, in case of goods, now I was talking about the recommendation of the GST Council. This 10 lakhs can be enhanced to 20 lakhs and 20 lakhs can be enhanced to 40 lakhs. Now, this particular provision was again carved out under section 23, where they say only exclusive supply of goods up to 40 lakhs, I need not register. Please remember, other than special category states, if I am a trader, and I'm doing an activity of trading only in relation to goods, then up to 40 lakhs, I need not get registered under GST law. Exception that if it is an interstate supply, mandatory you have to register. If you're into business of ice cream or pan masala or tobacco, then this 40 lakhs benefit is not extended to you. This is what we need to understand from section 23. Now, this particular slide is there under page number 9.14. I'll skip this particular slide. Last, if you recollect this recent amendment which has taken place from 1st January 2022, you would have read all the way in the newspaper, Swiggy and Zomato. What has happened? There was a notification of 9.5 where any supply which was made through e-commerce operator, instead of the hotelier paying the GST, now this e-commerce operators would be paying tax under GST law. So by virtue of this particular entry, what they say, any person who is dealing with supply of goods other than that notified list, they need not get registered up to the threshold limit of 10 lakhs or 20 lakhs other than that 9.5 list. This is again exception from my obtaining GST registration. Now, this section 24 examination, please expect for 2 marks a question from this particular section 24. End of this particular discussion, again I'll come back to Excel to give a couple of examples for having a better understanding. Let me see if there are any questions meanwhile before we move on further. Durga Rao is asking a question. So what is the difference between non-taxable and exempt? Non-taxable supply, I would say instead of non-taxable, it is not leviable. Don't call as a non-taxable. I will say not levied to GST law. What is not levied to GST law? Section 9. If you read to section 9, there is an entry. there shall be supply of tax on all interstate supply of goods and services except alcoholic liquor for human consumption, petrol or diesel. Now, that entry is called non-leviable, non-taxable, means it is a supply of goods, but not subjected to GST. Durga Rao, please understand. Alcoholic liquor, petrol, diesel. It is a supply of goods. It is a supply of goods. But by virtue of section 9, subsection 1, it is not levied to GST. So that's called non-taxable, non-leviable transaction. So exempt supply includes non-taxable supply. This non-taxable supply is your petrol, diesel. Why? It is not subjected to GST. And exempt supply includes that non-taxable supply. Now, what is an exempt supply? When you refer to, if you refer your working note, you have written somewhere notification 2 of 2017, notification 12 of 2017. The goods, services where the rate of tax is mentioned as nil or wholly exempted from GST. That is called exempt supply. So my non-taxable supply is a small set. My exempt supply is a big set. My exempt supply includes non-taxable supply. This is what we need to understand, Durga. Hope I've answered your question. Naveen asked a question. Agriculturist means individual or a HUF only. If a company is engaged, Naveen, agricultural land is not supposed to be registered other than an individual or it can be either with the HUF or individual. It cannot be with the company. Company at best can buy and sell agriculture produce, but it cannot own agricultural land, right? Durga Rao is asking a question again connected with petrol and diesel. Petrol and diesel is subjected to customs duty, but not to IGST. Please understand that. Ash is asking, what is the strategy for IDT preparation? Okay. Yes, I'll deal that in little later point in time. Let me finish my subject concepts and then I'll come back to that one. Namita says government exempt agriculture from GST as it is in list 2 of constitution. Definitely, there is no right to levy. That's the reason they have exempted that particular thing and they cannot be taxed. Absolutely, you're right, Namita. Either under income tax or indirect tax, I cannot tax exempt because it is exempted under my constitution. It is a right. Only for the purpose of aggregate turnover, I include that, and again, I take out for the purpose of registration under tax payments. Coming back, section 24 deals with your registration, which is mandatory registration. So when I deal with my section 24, this 24 overrides section 22, but not 23. Please understand. 22, 23, 24. When we read these 3 provisions, 22 talks about 10 lakhs or 20 lakhs. 23, a right to exempt from registration. 24, mandatory registration. So when we talk about these 3 sections, 23 has a overriding effect on 22 and 24. So out of these 3, who is supreme? Brahma, Vishnu, Maheshwara. So in a limited understanding for this particular discussion, my section 23 overrides 22, overrides 24. Now 23 I'll keep aside. I have been left with section 22, section 24. Now out of these 2 sections, section 24 overrides section 22. Means my 24 has got a exceeding power compared to section 22. Now what does it say? Persons who make interstate taxable supply means if there is any interstate supply from one state to another state, supply of goods, supply of services, mandatorily a registration has to be obtained. The 10 lakhs, 20 lakhs threshold is not relevant at all. Casual taxable person. I was talking about an example where I move from one state to another state. So if there is a casual taxable person, again, it is mandatory for me to register. Example, sir, I hail from the state of Andhra Pradesh. I'm into this, what I can say, handmade jute bags. I manufacture jute bags which are handmade. I travel from Andhra Pradesh to the state of Tamil Nadu to participate in a trade exhibition called, I would be called as a casual taxable person. Now, by virtue of Section 23, if it is a handcraft goods, I get exempted from GST up to a threshold limit of 20 lakhs. So what if this jute bag is not a handicraft goods? It is just a machine made bag. If it is not a handicraft goods, Section 23 does not come into picture. And by virtue of Section 24, if I'm a CTP in the state of Andhra Pradesh, my turnover is 15 lakhs. The moment I go and participate in the state of Tamil Nadu, and assuming I do a turnover of 3 lakhs, mandatory registration comes into picture. Let me come back to Excel to make you understand this. I'll talk about this Mr. A, resident of Andhra Pradesh. Aggregate turnover is say 15 lakhs. CTP say 2 lakhs in Tamil Nadu. Now, if you see aggregate turnover in AP, my aggregate turnover, that is, I would say turnover in state. My turnover in Andhra Pradesh is 15 lakhs. My CTP turnover is 2 lakhs. What is my aggregate turnover? My aggregate turnover is 17 lakhs. Now, when I look into this, when I apply Section 22, no registration required. Since aggregate turnover is less than 20 lakhs. Now, standalone, when I see Section 22, not required to register. Unfortunately, when I come to Section 24, CTP has to obtain registration. Now here, when I say CTP, please keep in mind, other than handicraft goods. This transaction is other than handicraft goods. Because I am a casual taxable person in the state of Tamil Nadu, register in Tamil Nadu. So I take a CTP registration in Tamil Nadu and I don't take a regular registration in the state of AP. Please keep in mind, I apply Section 22 for Andhra Pradesh. I don't take a registration. Why? As per Section 22, I have a turnover less than 20 lakhs. But the moment I am going to the state of Tamil Nadu as a CTP, I finish that, I come back. Even after coming back, my aggregate turnover is 17 lakhs. So when I combine both together, for standalone Andhra Pradesh, no need to register. Section 24, in case of a casual taxable person, I have to register. So I'll take a temporary registration to do business in Tamil Nadu. I'll come back, I'll surrender that registration. This is what we need to understand from Section 24, casual taxable person. Before I move further, yeah. Okay. Third point, persons who are required to pay tax under RCM. We are at 8:03. We'll do one thing. We'll take a break for 5 minutes. We will 8:03. Okay, 8:10. We will resume back. We'll take a break of 7 minutes and we'll resume back at 8:10. discussion. Hope you are able to see the screen and audio is also available properly. Let me have a confirmation. Nishant, we are on live, right? Nisar? Hope you are able to see the screen, ma? Yeah, okay. To start with, compulsory registration. Now, this 9.5, I'll explain this e-commerce aspect this way. Compulsory registration under GST. In relation to section this 9.5, e-commerce operator, I'll explain this way. There are three category registration: category 1, category 2, category 3. Category 1, I call them as e-commerce operator. Category 1, e-commerce operator. Category 2, where supplier making supplies through e-commerce operator who deducts TCS. Third, supplies on which tax is to be paid by e-commerce operator. These are the three categories. I will put it together. Now I'll explain one by one. Hope you are able to listen. Audio is clear and screen is visible, ma? Please confirm. Hope I'm audible and video is also visible. Please confirm. In your working note, please make a note of these three categories. Category number 1, e-commerce operator. Category number 2, supplier who makes supplies through e-commerce operator. Third, supplies on which tax is to be paid by e-commerce operator. Make an entry of these three aspects. Okay, now importance of these three aspects is: first aspect, category 1, e-commerce operator. You have an example of Amazon or Goibibo, Make My Trip. Now what happens here? I want to book a hotel through Make My Trip. Say I'm visiting Rajasthan. There is something called travel something, or take example, Make My Trip. I visit to Rajasthan to visit few places. I need to have accommodation. I need to have a local cab. I need to have a guide. I need to have flight tickets. So everything I book it through Make My Trip. I call Make My Trip as an e-commerce operator. So e-commerce operator who operates, who connects business to customer or business to business. Now, this I call as an e-commerce operator. I was talking example of Make My Trip. So Make My Trip is an example who has to register themselves because they're an e-commerce operator. This you please write down as a e-commerce operator. Mandatory registration. Example category 1, Make My Trip. Now, example number 2. Supplier who makes supplies through e-commerce operator who deducts TCS. Example. I am a small-time businessman. I am into manufacturing. I'm into selling of say tablecloth. Now these days, if you see, everyone is doing a work from home. We need to have a infrastructure where the furniture is required for us to operate at home. So a tablecloth is something which is sold for keeping the items. A tablecloth is a cloth which has got capacity to absorb dust, capacity to throw away the dust, a lot of functionalities. If I sell the tablecloth through a shop, only the local people will come and buy from my shop. I got an idea. Let me advertise my product. Let me sell through Amazon. Let me sell through Flipkart. Now, there are many people who are interested to buy a tablecloth with a good design. I have a variant texture, color, design. And my product is a special product for the reason if you pour water, it doesn't allow inside. And it also has a capability to absorb moisture. Now, my business gets enhanced. So what I do, I enlist myself with Flipkart. I enroll with Amazon. So I'll be called as a person who supply goods through e-commerce operator. So the goods which is supplied through e-commerce operator, that e-commerce operator deducts 1% TCS. So again, I'll be called as a person mandatory registration category 2. Please make yourself understand comfortable. Category 1, make my trip. Category 2, a businessman who enrolls for business through e-commerce operator like Amazon, Flipkart. Example, you can write supply of tablecloth through e-commerce operator. There, I don't look for 10 lakhs, 20 lakhs. Mandatorily, I have to register myself. This is your category number 2. Category number 3. Category number 3 is that person who supplies goods through e-commerce operator, and the tax on that should be paid by e-commerce operator. A classic example. With effect from 1st Jan 2022, any food which we purchase from ordered from Swiggy or Zomato. Earlier, what happens? Shop fellow raises the invoice, sale of food, say 250 rupees, GST 5%. He charges that 5% on that, saying 12 rupees 50, and he collects the GST. From 1st Jan, what happened? Instead of the hotel person charging GST on that, Swiggy collects that 5% and Swiggy remits that 5% to the government. That's called category number 3. Supplies of those notified goods where on that list, e-commerce operator has to pay tax. Like example, with effect from 1st Jan, all the food supplied through e-commerce operator, the hotelier does not collect any GST. Hotelier does not bill any GST. In turn, e-commerce operator has to charge GST. That's the third category who has to get registered under GST. So please make a note. C1, make my trip. C2, business of tablecloth. C3, food supplied through e-commerce operator hyphen Zomato, Swiggy, with effect from 1st Jan 2022. Now, these are the 3 categories which are relevant for e-commerce operator. In this section 24, wherever you come across, please bifurcate into these 3. So point number 1, person who are required to pay tax under 9(5). This is category number 3. NRTP, we have discussed like CTP, any NRTP, mandatory registration. There is no threshold limit. Persons who are required to deduct tax under 51 or whether or not registered, like your government contracts, a person who is required to deduct TDS, like income tax TDS, any contract, any goods or services supplied to government undertakings, they deduct something called TDS. That is a mandatory registration. Point number 7, persons who make taxable supply of goods or services on behalf of another person as an agent, principal agent. So in case of a supply where it was supplied through principal or agent, mandatory registration. ISD, input service distributor, mandatory registration. Persons who supply goods or services other than 9(5) through e-commerce operator who is required to collect tax under 52. For this point number 9, category number 1, what I have said, make my trip. Every e-commerce operator who is required to collect tax under 52. Okay, this point number 9 is category 3. Point number 10 is your category number 1. So these two fit into that category 1 and category 3. Last, every person, that is online information database access retriever, OIDAR, a person like Netflix who is having a place of business outside India, online he is doing a business of supplying services, online information database access or retrieval services by way of advertisement or anything connected with your electronic media. That person should get registered under GST law, and such other persons as may be notified. So as on today, these 12 is a list which we need to keep in mind where compulsory registration is applicable. As I say, Section 22, Section 24. When I compare these two, Section 24 is the supreme compared to Section 22. Section 23, when it comes to picture, 23 has a right as a benefit to override 24 and 22. This is what we need to understand. Now, having understood what is my registration, we need to understand certain procedural aspects. Examination point of view, they'll not ask you when you have to file, etc. They'll ask a couple of technical concepts, how a registration can be cancelled, and what is the time within which a registration needs to be applied. Standard couple of questions we can expect. Every person who is liable to be registered within a period of 30 days, he need to apply for registration. In case of a CTP NRTP, 5 days prior to my commencement of business. Let me come back to Excel to make you understand. When we talk about registration procedure, now let us assume that now this is a period of 30 days. This is my day 1. Say like this, it goes on. This is my 30th day. So from the day I am liable to register, they say within 30 days apply for registration. Now, if I am liable to register on 1st Jan 2021, this is my liability to register. So, what the provision says, shall apply for registration within 30 days from the date of he becoming liable to register. So, from 1st Jan, within 30 days, on or before 31st Jan 2021, right? So from the day you are supposed to register, I have been given 30 days to register for normal. In case of a CTP, I'll copy this example. CTP or NRTP. In case of a CTP or NRTP, they say at least 5 days prior to commencement. So, in case of a CTP or NRTP, the day business has to start, from there 5 days before I need to apply for a registration. I cannot, it is a uninvited guest, casual taxable person, no permanent place of business, NRTP, not a resident of India. So for these two people, they say, boss, 5 days prior to your business, come and get the registration. For example, business to commence from say 15th July 2021. So that application to be filed at least on or before 10th July 2021. So this is the expectation. This is the expectation from your casual taxable person or a non-resident taxable person. Coming back. Now, SEZ, there is a separate expectation. What they say, look, in case you are having a normal place of business and also SEZ, please apply for a separate registration. Example, Wipro. Wipro has got a consultancy wing, which is a non-SEZ unit. Wipro also has got a SEZ unit. Now, why Wipro has got a client who is there in US, there is a direct connection with services to be rendered to US. So they import material, the goods, and they use this in services directly connected with the US client. To have a benefit of customs duty and all other taxation, they have something called SEZ location. Under GST law, Wipro in the state of Karnataka, if they have 5 places, assuming 3 building is in SEZ and 2 building outside SEZ, what they say, outside SEZ for 2 locations have one registration. If you have within SEZ, all SEZ have a separate registration. So GST, though you have a presence in one state, 5 different locations, SEZ have a separate registration, non-SEZ separate registration. This is what they have said. Similarly, for your territorial waters, if there is a supply happening from territorial waters, look at the nearest land point and obtain a registration in that coastal state or union territory. And sir, what if I want to have multiple registrations? I want to have, like example, in Tamil Nadu, there is one brand called Sarvana Stores. Sarvana Stores has got jewelry division. Sarvana Stores has got vegetable division. Sarvana Stores has got grocery division. Sarvana Stores has got, say, apparel division. For all different divisions, I need to have a separate registration in the state of Tamil Nadu. They say, yes, you can go ahead with that. One, you can opt. If you want really to have multiple, you can do that. So what if I want to do voluntary registration? I don't have the compulsory registration applicable. I don't exceed the threshold limit. Can I apply for registration? Answer is yes, you can apply for registration. So what is the date I have to obtain for registration? As I said, 30 days prior, 30 days from the date of liability, or 5 days before your CTP or NRTP. So what will happen? If I have a presence in one state, I also have a presence in other state. Once you're registered in one state, you will have to be mandated registered in other state. And what will be called as? You'll be called as a distinct person. So if you're registered in one state as a composition dealer, you have to register mandatorily in another state also as a composition person. But for the purpose of GST law, you're registered in one state and you also registered in another state. You'll be called as a distinct person. And establishments of a distinct person. For registration, PAN is compulsory. Sir, what if there is no PAN? Like government agencies where they deduct TDS. Like example, your Rajasthan Municipal Corporation. When a contractor does the civil works to Rajasthan Municipal Corporation, so they don't have a GST, they don't have a PAN because they're a government undertaking. They say, for the purpose of your mandatory compulsory registration, no need to have a PAN. We will give a tax deduction number that is good enough. Based on that, I'll give you your registration. And under GST law, every person who have a registration, they should undergo Aadhaar Authentication. Where if you don't have Aadhaar, certain other basis for your validation of registration. Now, this is a new amendment which came from 2020, Jan 2020, which was tested for your November 2020 examination. Again, it may be expected for your May 2022 examination, where Aadhaar authentication is a mandatory, where there is a compulsory provision of your Aadhaar number. So how do I do this Aadhaar authentication? In case if you're an individual, proprietor Aadhaar is required. In case of a Karta, HUF, a Karta Aadhaar number is required. So what if it is a company, a managing director, a whole-time director, or an authorized person is good enough? So what if it is a partnership firm? A partner's Aadhaar number is good enough. In case of a BOI, AOI, any member of the management committee, in case of a trust, a trustee, details are required. So this is how, on the basis of your cadre of registration, they have identified who is the person who has to give a Aadhaar number for authentication under GST law. So what if I don't have an Aadhaar number? The exceptions to this here, Aadhaar authentication. They say a person who is not a citizen of India, definitely non-resident of India, they cannot have a Aadhaar. So that person has been exempted. Example. So there is a managing director who doesn't have Aadhaar. He is a citizen of say Japan. So that person is exempted. So what if that managing director doesn't have? Any authorized person, if he has got Aadhaar, that can be used for authentication. If it is NRTP, like we were talking about CTP, NRTP. So any non-resident taxable person comes into India for doing a business. Now, definitely NRTP doesn't have your Aadhaar number. So that person is exempted by virtue of your section 60 or any other class of persons like your Rajasthan Municipal Corporation. Rajasthan Municipal Corporation doesn't have any Aadhaar. So it is not an individual, not AOP, not having authorized partner. It is not a HGF. Because it is not fitting into any of these things, those class of people have been exempted from Aadhaar authentication. So examination, 2 marks question, who are the people exempted from Aadhaar authentication? You need to write this list. 2 marks question you can expect from your methodology for authorization of your registration. Then, so what will happen is of NRTP. NRTP, they will not have Aadhaar authentication. They will collect other information like his what you call unique identity number, like PAN we have in India. That gentleman will have one another number in that nation. So that unique identity number, and also based on this, what you call a passport, those details will be collected for the purpose of issuing your registration. Now, sir, you have said everything. What if I don't apply for registration? What if I don't know that I have to take a registration? Then the proper officer may proceed to register such person. Sir, I have been doing business. I don't know. I'm a layman. I don't know how that I have to register. Then if proper officer knows that Praveen is supposed to register but not registered, then he may get Praveen registered under GST law. Next, there is a set of organizations called UNO or WHO or embassy, consulate. There are certain specialized organizations where they come and do some specialized activities in India. Those organizations, they obtain something called UIN under GST. Why? Whatever taxes they pay in India, they claim a refund from the Indian government. So these entities apply for UIN for the purpose of claiming refund of those taxes paid. Now, every person who is registered under GST law should display this registration certificate at the principal place of business, and also the GST number should be quoted on the what you call your name board. It is compulsory as per Rule 18. If not, what happens? 50,000 is the penalty. 25,000 as state, so 25,000 from the GST. Section 125 gets attracted. Now, CTP and RTP. As I say, 5 days prior to doing a business, I have to obtain a registration. A very peculiar thing. When I file an application for CTP and RTP, it doesn't ask for address proof. It asks where you are commencing your business. The place where you are going to do business, please indicate what is the expected turnover. On the basis of your expected turnover, they'll ask you to deposit tax in advance. And that registration, either CTP or NRTP, generally valid for 90 days. If I want to extend that period beyond 90 days, I have to make an application to extend beyond 90 days. These are the special provisions with respect to CTP and RTP. Now, amendment of a registration. Sir, I have taken a registration. I have given all the details, where I do register, what is the nature of business, who is the authorized person, what is the form, various things I have given. What if I have to make an amendment to my registration? So let us understand various forms where I apply for registration. REG1, it is a regular form for your registration. REG7, it is for TDS or TCS. Like example, I was talking about Rajasthan Municipal Corporation or Amazon, Flipkart. So those people apply application under REG7. REG9 for your NRTP. REG10 for OIDAR, like Netflix, what I was saying. And finally, REG3 for your United Nations, UNO, UNESCO, embassy, consulate, all these organizations make application under REG3. So as of today, these are the 5 application forms which are applied for obtaining a registration under 22 or 24. So any of these 2 provisions, these are the 5 forms I use. Whatever application I have filled, what happens if there is a change to be done? So within a period of 15 days from the date of change, I have to go and make a application amendment. So what if I haven't done? Then it is a non-compliance. So whatever changes I have done, like example, when I'm taking registration, I gave my registration number, my mobile number as an authorized person. Say I happens to be a director. After some point in time, I move out of the organization as a director. Someone else comes as an authorized person. So at that point in time, the authorized contact person email ID and mobile number to be changed. So whenever there is a change in the information provided at the time of applying registration in any of these forms, within a period of 15 days, I have to apply for change. So officer within 15 days, either he accepts your change or he rejects your change. If he is going to reject your changes, then he has to give a show cause notice. And for that show cause notice, within 7 working days, I have to give a response. Sir, I have applied for the change. 15 days, officer didn't do anything. He has issued a show cause notice. I replied to the show cause notice. Either of these two, he didn't respond to anything. Then it is deemed that your changes are accepted. Next. Cancellation or suspension of registration. This is one mechanism which has been brought into amendment with effect from Jan 2020. This attempt, May 2022 and November 2022. Please expect a question from section 29 read with Rule 21, Rule 21A. Next 5 to 10 minutes, please pay attention to these provisions. Reason, these are the recent amendments which took place in 2020, somewhere in Jan 2020. So expect a question from this May 2022 attempt. Cancellation of a registration. How do I, when does the registration get cancelled? When the assessee applies for registration cancellation on his own basis or when officer on his own motion. Now, suspension or cancellation. Why there is a cancellation required? I have registered under GST law. I started my business. After some point in time, I felt business is not happening. Let me get out of this business. So when I think to get out of business, I file an application asking the officer to cancel my registration. That's called application made by the registered person. Or on the other hand, suo motu by the officer. Suo motu by the officer. Officer, he himself feels that the registration has to be cancelled. Why? Because the business has been discontinued. I have stopped. The business has been transferred. There is a transfer of business from one person to another person. There is a change in constitution. A partnership firm converted into private limited company. A partnership firm, AB has become as ABC. There is a change in the PAN. When there is a change in the PAN, altogether registration has to be changed. If the proprietor, there is a death of a proprietor, because there is a death, there is a discontinuation. So there should be a cancellation. Amalgamation, conversion from one entity to and legal or demerged. These are all various reasons why there should be a cancellation. Now, a proper officer, now this is one amendment which has come effect from the last 2020. Now, officer can cancel registration suo motu when a registered person has contravened the provisions of the Act. That means contravention means you have done a business activity, you have grossly contravened with the provisions. Example, you would have seen the fake invoices being issued. Recently, a fortnight, maybe a week or 10 days back, in the news we have seen in the state of Maharashtra, I believe, Rajasthan, there was some 100 crores cash which was unearthed. There was a fake GST invoices were issued. So if you have done any contravention, which is a punishable offense, then your registration is liable for cancellation. Or a person who has registered in a composition and who has not filed returns for 3 consecutive tax periods. Now I have to pay a tax using this form called CMP 08. For 3 months continuously, I haven't paid tax, I haven't filed a return. Then officer can cancel my registration. Next, cancellation may happen where for a continuous period of 6 months, has not furnished a return, like other than composition. I haven't filed my returns for 6 months. GSTR 3B, I haven't filed for January till September. Now, since I have not filed for more than 6 months, my registration is liable for cancellation. Or a person who takes a voluntary registration and didn't commence his business within a period of 6 months. I applied for registration voluntarily. First month, second month, third month, fourth month, fifth, sixth, all nil returns. Seventh month, nil return. Boss, what is this? You have taken a voluntary registration and you have been filing nil returns. So officer has a right to cancel. Registration obtained fraudulently, willful misstatement, suppression. Now, where we come across this fraud, willful misstatement, suppression? Sir, name of the person is say Jitender Sohail, but actually when I went for a verification, there's no person called Jitender Sohail. The address which was given, you have mentioned as number A32 slash fifth floor. When I went to that particular building, there was no fifth floor at all. There was only one floor. There was no fifth floor. The address itself is completely wrong. So when an officer gets to know that you have given a fake information to obtain the registration, they can cancel the registration. Cancellation, when officer wants to cancel, first and foremost, he will issue a notice and then he will cancel your registration. Now, whenever there is a cancellation provision which was called for, till the date of cancellation, whatever activities were done by the business person, those activities shall firmly crystallize the responsibility of the taxable person to pay the taxes. I cannot say, sir, I have applied for registration cancellation in the month of October 21. I need not pay taxes once I have applied for cancellation. But law says, Praveen, till October 21, you have done your business. So whatever responsibility you have to do with respect to filing of return, payment of taxes, payment of late fee, interest, etc., all those holds good till the date of cancellation. Just because you have cancelled, you're not removed from your responsibility. That is what they say. Next, at the time of cancellation, when I apply for application for cancellation, they ask for certain information. Look, if you're into the business of dealing with goods on the date of cancellation, what is your inventory? That is raw material, semi-finished goods, finished goods, or capital goods. On this inventory, tell me, was there any GST paid which was not consumed? Because you have, at the time of purchase, you have said this is going to be used in your furtherance of business. The day when you are surrendering your registration, there was an inventory which was not consumed, and if there was a GST paid inventory, please debit that equivalent GST from your electronic cash ledger or credit ledger. What if there is a capital goods purchase? So there is a formula under section 15, which Vigdesh sir would have covered under section 18, where every quarter 5% proportionately ITC I have to reverse. That particular formula under section 18 gets applied where when I file my application for registration, I need to file a form declaring that this is the inventory. On that inventory, this is the GST applicable. That particular GST, either I have to debit from electronic cash ledger or electronic credit ledger. Now, this cancellation, when we are talking, there is a rule called Rule 21, which is in line with your section 29, where it says, look, you have given your place of business, but there was no business conducted from that place of business, then I'll cancel your registration. Or you're issued an invoice without actually supplying the goods, all your fake invoice cases. Because you have done a contravention of GST law, I'll cancel your registration. Or you have violated anti-profiteering measures, I'll cancel your registration. After registration, within a period of 15 days, I need to update my bank details. So at the time of registration, I may not give my bank details, but once the registration number has been sanctioned, within a period of 15 days, I need to update my bank account details. If I haven't done that, again, my registration is subjected to cancellation. Availment of input tax credit, not in compliance with section 16. Again, connected with your fake invoice cases. If you have not filed your GSTR 1 or you have not filed a return under GSTR 3B, if you have not filed GSTR 1 for a continuous period of 3 months, or you have defaulted to file your GSTR 9 for 6 months, you can your registration will be held liable for cancellation. You have not paid your tax in compliance with Rule 86B. Rule 86B is a restriction where when I have to file my returns, 99% of input tax I can use from electronic credit ledger. Balance 1% I have to pay through cash ledger. When we go with the respective provisions, we will discuss with Rule 86B. As of now, please understand, if there is a non-compliance with that Rule 86B, again, officer can cancel my registration. Now, we have understood why there is a cancellation. We have understood what circumstances my registration can be cancelled. So what if I did a mistake? Now, under the law, under any judicial principles, there is something called condonation. What do you mean by condonation? Giving a relaxation. Revocation is one such measure. What do you mean by revocation? Once the officer has cancelled my GST registration, I can apply for revocation. That means revoke my cancellation, nullify that cancellation. Once my cancellation is nullified, my registration gets intact. Example, sir, my business is dislocated. I couldn't pay my salary and my other operational costs. So I have defaulted in payment of GST. So what I have done, whatever money I have received from my customer, first I have paid my salary, second I have paid my other operational expenditure. Now I am willing to pay my GST. Officer has cancelled my GST number. I go to the officer concerned and say, sir, look, I did a mistake. I have to pay the taxes. I haven't paid. I have to file my returns, but I have failed to file continuously for a period of 6 months. Now I am willing to come forward to pay the tax along with interest. That is a mechanism where a revocation comes into picture. Or alternatively, officer has done a cancellation erroneously. Again, I apply for revocation saying that officer did a mistake in terms of revocation. I'll give an example. Say an example. There is a tri-party transaction, A, B, C. A sells the goods to B, B sells the goods to C. There was a raid done in the premises of C. C has given a statement saying that whatever invoice B has raised on me, it was a fake invoice. That means actual movement of goods from B to C didn't happen. Only invoices have come from B to C. On the basis of that invoice, I have taken a credit. So this is a statement given by C on where B has been party to the offense. Now, the GST officers goes to the premises of B for doing an audit. While doing the audit, they have noticed that B purchased some goods from A. There was a misconception of the GST officer that there was a party called C who did a crime, who has accepted. There was a party called B who also did a crime. It was established. By connection of B and C, deeming fiction, A was also did a fraud, was a misunderstanding done by, say, officer. In actuality, A supplied goods to B. B has raised a fake invoice from B to C. So when I look from A to B, there was a genuine transaction. But by virtue of B and C, cancellation of A's registration was done. Then A can apply for revocation saying that, my lord, this registration was suspended or cancelled with a infructuous, without a base, without a evidence against me. So when this argument was put forth, then the cancellation can be revoked. So what is the time limit for cancellation? From the date of cancellation, within 30 days, I have to apply for revocation. So what if I have not applied within 30 days? I have a further 30 days to go before additional commissioner or joint commissioner. In general, assistant commissioner or deputy commissioner. These are the people who pass an order for cancellation. Once an order was passed by assistant commissioner or a deputy commissioner, within 30 days, I have to apply for the same officer. So if I miss the 30 days, go to the next level called additional commissioner or joint commissioner, where further 30 days is given. So what if I have missed the second opportunity? I'll give a third opportunity where further 30 days, I can go till commissioner. So in normal, 30 days for applying for revocation. If I failed first opportunity, go to additional commissioner, joint commissioner for 30 days. Even if I fail the second level, go to the third level called commissioner beyond another 30 days. In totality, 90 days is given to me. 90 days is given to me for filing an application for revocation. Now, whenever there is an application for revocation, either it will be accepted or it will be rejected. If it is rejected, they'll give an opportunity of being heard, why it is being rejected. They'll summarize all the facts and then they'll take a decision to cancel. Once your application is cancelled under state law, it will be deemed to be cancelled under central law. Now, these are the provisions which are connected with my cancellation. Now, I'll come back to Excel file to make you understand slight difference between cancellation and suspension. Suspension of registration. Cancellation of registration. Now, just give me a minute. Yeah. So please understand that cancellation, a step before cancellation is suspension. Rule 21A talks about suspension. Rule 21 talks about your cancellation. Now, when my registration can be cancelled? When there is a contravention of GST provisions, non-filing of returns, irregular availment of ITC. These are the cases where my registration can be suspended. Point number 4, mismatch between GSTR 1 and 3B. Now, please understand, these are some of draconian provisions which are brought under GST law. Right? Now, if I do a contravention under any of these provisions, my registration certificate is liable for suspension. Now, this is a provision which was brought from December 2020. Multiple changes happened to this particular Rule 21A. Examination point of view, expect one question for 4 marks. What you understand by suspension? Under what grounds suspension can happen? So, as I said, suspension is one step prior to my cancellation. Straight away, officer cannot cancel. He will do a suspension and then he will come for cancellation. Now, suspension, he will give a show cause notice. Whenever there is a suspension, a show cause notice is given where they will suspend your registration. Once a registration is suspended, you cannot issue e-waybill. You cannot file your GSTR 1. Reason, when you don't file GSTR 1, credit does not flow to the other party. When you don't issue e-waybill, movement of goods is terminated. It is temporary blocked. Suspension is of that draconian nature. So when any of these provisions are noted, prior to cancellation, initially they will invoke suspension. And after giving a show cause notice, if sufficient cause is not given, then straight away they will go for passing an order for cancellation. Then my cancellation comes into picture. So suspension is a temporary nature where from suspension it can be brought into normal, or suspension can get converted into cancellation. So once a registration is suspended, you'll be given an opportunity of being heard. They'll issue a show cause notice saying that, look, you've done so many malfunctions, these discrepancies are noted. Kindly let me know why your registration should not be suspended. If the registered person gives a satisfactory answer with the evidence, then this suspension will be withdrawn. If there was no suspension, if there was no satisfactory explanation, then they will do the cancellation by way of passing an order. So in case if the cancellation was done, the only recourse is revocation of cancellation, where we have seen that a period of 30 days. Let me see if there are any questions so far. There is a question from Durga Rao. Suppose a company has 5 manufacturing units in a state and want to register 5 different registrations. How GST department allot GSTN for last 3 digits? See, Durga Rao, that 15 number, first 2 digits is the state code. The next 10 digits is your PAN number. The last 3 digits is the hash code. It's a what I can say. It's a code internally allocated by the department. It's called hash code. So it is a prerogative system generated hash code for the purpose of your GST allocation. Nothing technical on that particular ground. Geeta says registration is on or before 30th Jan or 31st Jan. In the example what we have discussed, Geeta, 1st Jan there is a liability to register. 30 days from there is 31st January. So I need to apply for registration on or before 31st Jan, not 30th Jan, Geeta. Then moving on further, Durga Rao asked a question, is it mandatory for composite supplies also? Composite supply question is not clear, Durga Rao. Namita has a question, if A Limited do oil extraction in territorial waters, if place where oil is found changed, will A Limited need to change registration every time when oil is found? Nearest point, yes. The nearest state where the oil exploration is happening, in that particular state, they need to take a registration. Based on territorial waters, yes, Namita. Wherever there is a nearest sea point, land point, there they have to take a registration. There's further one question. Based on the registration number, Durga Rao, we can find out whether it is a SEZ registration, regular or NRTP. Those bases we can find out. Looking at the registration on the GST portal, we can find out. Namita has a question. In market, many shopkeepers have GST number, but not display. How the proper officer comes to know about the shopkeeper? See, many of the businessmen doesn't know the GST provisions. Honestly, I do admit, Namita, many GST people, businessmen doesn't know that on the shop name, the GST number should be printed. If you visit many of these big companies, ATL office or your malls, every office, there is a GST number which is printed on the entrance, on the name board. Now, it is a complaint as per the GST law. As a small businessman, I cannot say, sir, I'm ignorant of the law. If I don't display GST number, is it a punishable offense? Answer is yes, it is a punishable offense. It is an ignorance. We cannot plead before the authorities. Further, if service A renders is exempt, later it becomes taxable. So A need to apply for registration in which provision? If originally if the services are exempted, later it has become taxable, I need to apply for registration applying the provisions of section 22. I look at the threshold limit 20 lakhs or 10 lakhs and accordingly I have to go for registration, Amita. Further, in case of amalgamated company needs to apply for registration, previous company gets cancelled as per 29. Yes, assuming that there is an entity called ABC. This entity dissolves entity A, entity B, entity C. 3 different entity comes into picture. This entity ABC completely diluted. Then section 29 gets into picture for cancellation of my registration. Further, where defaulted committed in paying GST if A relays money after 100 days. See, once I have to register, I have not applied within a period of 30 days. The day when I apply for registration, a good question, I'll answer this question this way. See, as per law, apply for registration within 30 days. Now, the question of Namita is, sir, on 1st Jan 2021, supply is made for rupees 10,000. On 15th June 2021, there is a realization that above supply is taxable. Now, when I say 10,000, I have an aggregate turnover. I have an aggregate turnover exceeding that 10 lakhs or 20 lakhs as on 1st Jan 2021. On 15th June, I have known that this is a taxable supply, but I forgot to take a registration. Applied for registration on 15th June 2021. Then RC will be effective from 15th June 2021. Now, this is the crux, Namita. When I don't apply for registration within a period of 30 days, when I don't apply for registration within a period of 30 days, the day when I apply for registration, from that date, my RC will be effective. That means no taxes can be collected, nor a revised tax invoice can be issued. This is the impact of not obtaining registration within a period of 30 days. My registration is effective from the day I apply. Prior to my registration, whatever activities I have done, I cannot collect any taxes. This is a impairment for me under section 25. Durga says, as I purchase, how can I find out my supplier registration is cancelled? On the GST portal, Durga, once I put the GST number, it shows is it active or is it inactive. If it is inactive from the day when it is cancelled, it is visible, Durga. Yes, the nature of registration also is available on the GST portal. Further, if A Limited is doing oil extraction, need to change registration to nearest point on land, will it previous registration? Okay. If the oil exploration is done in a particular state, and from there I move into a different state, then I have to cancel my old registration and I have to apply for a new registration now. This is what we need to understand. And this is one slide. I think the pages or some student was asking. Examination point of view from this chapter, what do I expect? A 4 marks question for calculation of aggregate turnover. I've given one word file. I've given a couple of examples. Please work out. I'll come back. I'll put end of a couple of days with answers, the same work note with answers. So please expect 4 marks question on the basis of computation of aggregate turnover to apply for 22, section 22, that is 20 lakhs or 10 lakhs. Second, what is the validity of CTP? That is registration under casual taxable person. We have read that 90 days, apply 5 days prior to registration, and pre-deposit in advance your tax to be paid under CTP. Then finally, registration where there is a threshold limit of 40 lakhs for supply of goods alone, which is under section 23. In addition to that, this cancellation suspension. These are another 2 topics which are little important from your examination point of view from this particular topic called registration. So students, we are at 9:03. Let me, I thank all of you for your patience hearing. I'll wind up my discussion today. We will see you again on 11th of this month. Till then, goodbye, good night.